All right, perfect. So, yo, what is up for everyone on the YouTube replay? I hope you're having a great Sunday. The market just opened 8 minutes ago, and let me give you a quick portfolio update. The overnight market's pretty green right now. UiPath is up 6%. Is that real? Let me actually check that. Yeah, look at that. UiPath is up 6% in the overnight market. Let's go. Hopefully, we'll have a green Monday because I know Bitcoin's doing pretty great, hit an all-time high today. Here's some other stocks that are green: Sprouts Farmers Market, T Rowe, Reddit. Robinhood is green as well. That's crazy. Anything red? Disney's red, Futu. All right, so that's our Webull portfolio. Let me also pull up the Moomoo account right here. This is our buy and never sell portfolio, where once we buy a stock in here, I legit try and never sell it for the rest of my life. And then, of course, we have here our dividend-only portfolio, where every stock in here, of course, pays a dividend. But most of these are like dividend growth companies, S&P 500 companies like Meta, Google, McDonald's, Constellation Energy. Constellation Energy is up 1.4% the overnight market. Let's go. They hit an all-time high on Friday. So let me actually just show you the whole market, though. The QQQ is up 0.28%. That's incredible. I think that's a new, nope, not an exact all-time high, but still great news. Let's see. Apple's, everything's green on here except bonds. It looks like US 20-year Treasury yields down 0.5%, but everything else is green. I'm not seeing anything else in the red. So, hey, tomorrow should be a green day. Hopefully, I didn't jinx it there. Hey, what up, Looney? Hope you're having a great day. And what up, Lucas? Happy Sunday. Let's see, what is... So actually, I do know this company. I'll check out NEO in a second here, but let me finish this portfolio update. This is our buy and never sell account, and year to date, we're doing pretty good. We're actually up 58%, and the S&P 500 is only up 14%. And man, I missed this April dip right here. We were doing a little bit worse than the market. We fell 16% when the S&P 500 was only down 13. So in April, we were down 16, but we've had an insane rally the past couple months here, mainly thanks to Comfort Systems, Amphenol, Powell. These are great ones. So let's look at NEO right here. Yo, then we'll look at Apple. Hey, what up, Michael? I'm deep on Apple. That's a great company to be deep on because that's a great never sell company. Here's a stock that I would be careful with, though. This is NEO. This is an electric vehicle Chinese company. So all the revenue comes from the US or from China. And check this out right here. One thing that the stock is rallying recently is their NEO delivered vehicles up 40% year over year. So their vehicles delivered are up year over year. They've had some good results with their SUV sales. But here's the thing that keeps me away from Lucid. If you look at the top right, the market cap there, this whole company is worth $19 billion. First off, they're Chinese, so you're paying an ADR fee every year. But let me show you this right here. Yeah, all the revenue comes from China, but the fact that they just lose net income every quarter, we've converted the currency to USD. So, yeah, this is not great. They're losing, nearly $1 billion in net income a quarter. So I would just be careful about that with NEO, but they have been seeing, well, the sales are up 10% year over year. I just be careful with them. I like BYD a little bit better. Hey, what up, Looney Wealth? Do you only pay attention to companies' financials or macro situations as well? I usually blend everything together. I kind of like to look at a bunch of stuff. Where do you think Oklo is heading? Probably, it depends on momentum because fundamentally they should be a lot lower. But someone said, Michael said, I'm deep on Apple. This is a great stock to just buy and never sell. They're nearly at an all-time high. And there's some cool metrics that they have. Like their smartphone market share is a 17%. So 17% of all smartphones are iPhones. Literally half the revenue comes from their iPhone sales. And then their high margin business, the best part about Apple is actually the services side. So whenever you go spend $100 in the App Store, $30 of that goes back to Apple as a royalty, high margin royalty. Then they have the Mac sales, the wearable sales, the iPad. And here's why Apple's also a bit affected by tariffs. Did you know that only 36% of Apple's revenue comes from the US? I always thought it was a little more than that, 26% EU, 17% China. But I like these net income numbers. Like this is insane. This is why they're a Mag 7. They're nearly making $25 billion in net income every quarter. And what is Apple doing with $25 billion in net income a quarter? Well, they literally spend it all on share buybacks. They spent $21 this quarter buying back their own shares. Like that's what I love about Apple. They're so shareholder friendly and they're investing in the future. They're investing in AI. Like I just really like Apple. That's a never sell stock, own them, don't trade them. When did the N and FANG change to NVIDIA? Probably after the Meta acronym. It used to be Netflix. But it was probably after FANG, Meta changed its ticker symbol. Thoughts on Amazon? Looking like a good buy right now. Yeah. Hey, and Chris said, what app are you use? Yeah. Hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage. But so yeah, Amazon is a stock I own in here. This is a great never sell company. This is legit like an ETF in one. Like a lot of people know Amazon for their online stores, but they have so many different businesses, which is so cool. Here, I'll actually show you this real quick. Like, look. Oh, hold on. Or let's just go back here. Wait. Wait, they really don't want to make this easy for me. Well, we'll just have to go back to this here. Anyway, 50% of the revenue comes from the online stores, then their third-party seller service, then their AWS, their cloud business. On an annual, it's over 100 billion of annual revenue for them. Like this is their highest margin business, their cloud business. Then they're in subscription services, physical stores like grocery stores. So I just really like Amazon, and they're also expanding margins. Check this out. So if we look at the revenue's up 13, but net income is up by 35. So, great margin expansion. This is another never sell stock. So innovative. You don't want Amazon as competition. They will win. So yeah, Amazon literally robotics play, subscription play, e-commerce play, robotics play, grocery store play, cloud play. It's a UPS, Instacart, Oracle, all in one. It's Walmart. Pretty cool. Hey, Aaron, what's up? Thanks for all the roses there. Hope you're having a great Sunday. EZPW stock. Let's do it. Thanks again for all those roses there. I appreciate that. And let's see here. Futu is a good time to DCA. Yeah, we'll check out Futu after this. I love that stock right there. So here's EZ Corp. They're a $1.1 billion company, and they're at a new 52-week high, or maybe 1-year high, which is pretty cool. So they're a pawn shop. Okay, so look at that. US Pawn. Let's see how that's doing. The sales are actually growing very nicely. There's no decline, or ever since 2022, there's been no decline. It's just grown ever since. It's up 10% after going 10%, after going 16. And so that's their US pawn shop. Their Latin America pawn shop is up 10% after going 15, after going 25. So, hey, the pawn shop businesses are really good. Or let's see what their net margin is. They have 9% net margins. They're making good money every quarter, pretty much 25 mil in net income a quarter. So actually there's your pawn shop play. I'll actually put them on the watch list. Do they have a dividend? No dividend, but that's all right. APLD stock. Yo, what up, G-Lu? How's it going, man? Yo, that's actually a stock in the NVIDIA portfolio. So if we go to where is that? NVIDIA's portfolio, one of the stocks they own is APLD. It's their second largest holding under CoreWeave. CoreWeave is their main position. But what we've seen is they've really benefited from being in the NVIDIA ecosystem. NVIDIA got APLD a bunch of partnerships with CoreWeave. We should actually see that down here. And there was some OpenAI news, like NVIDIA does a deal with OpenAI, then OpenAI does a deal with APLD and CoreWeave. So anyway, this one's just been on some crazy momentum. Would I buy it here right now? Probably not, but it's cool to see that NVIDIA owns it. That's a data center hosting business right there. That's most of what they do. So Looney said FUTU stock. That's actually one I own here in my other portfolio. And this is, in my opinion, the better version of Robinhood. So let's go check that out right here. I like analyzing it on this app right here. So let's see. FUTU stock. That's this app that I'm on right now, publicly traded. So I love Moomoo. Let's see here. Santiago said, what app is this? Yeah, hey, I'm not sure what app you were talking about, but the one I'm on right now, it's in the link tree in my bio, the very first link. All the apps I'm using are in the link tree in my bio. This is my favorite one. It's the first link there. But here's Moomoo. This stock right here is incredible. I think they're the better version of Robinhood. At least if you want exposure to brokerages and crypto, and this is the stock to do it. The multiple is fair. They're trading at 23 times PE, so that means 23 times net income. Check out their users right here. Their users are at a record 27 million users. Client assets are at 124 billion. But look at this right here. This is the incredible part. Their net margin. They legit have a 48% net margin. That's insane. So the revenue's up 69. First off, just the lifeblood, the revenue has been so growthy the past 3 quarters. It's up 69%, and the net income is up 111. I can't believe it. 48% net margins. And they make a lot from brokerage commissions. That's up 86% year over year. Then they have their interest income. That's up 43. And their crypto revenue, which is new, that's their other income. Look how growthy it's been the past 3 quarters. It also includes other businesses besides crypto, but I think that's where that's at. But anyway, they also do a yearly special dividend, which is pretty cool. Every December, right around Christmas time, they do a yearly special dividend. So it's kind of like It's a cheaper version of Robinhood with just as good growth, just as good fundamentals. So yeah, that's that stock we just looked at is this app that I'm on right now, publicly traded. Remember, they were making a bunch of interest income. Well, if you look in the middle of my screen, I have $1,000 of cash and it earns me a 3.85% APY. They earn a little bit APY on top of that, and that's how they make their money. So anyway, yeah, that stock we just looked at is this app I'm on right now, publicly traded. All right. Well, this is a brokerage. By the way, if you want to get this app, I'm on Linktree in bio, first link there. Or so someone said, Dylan, what up? He said, premiums look good. Let's see. Wait, what are some insider plays? I never buy a stock really just because an insider's buying. But here's BBWI, Bath and Body Works. But if an insider's buying and the company has good fundamentals, then that's interesting. But anyway, here's Bath and Body Works. Not really a stock you want to own in the long run. If you bought this stock in 2007, you're actually down on your position. But let's see here. So yeah, this doesn't really beat inflation. This is single digit revenue growth. The revenue's up 1.5% year over year. Last quarter, it was up 2%. So that doesn't really beat inflation. And the margins fell. The net income fell by 57%. Yeah, that's rough. At least this is good news. At least they're still making net income every quarter, but 64 mil. Oh, they have a lot of debt to pay. Or what are their cash from operations? Yeah, barely. So their cash from operations includes their negative debt interest. Let's see how much net they have. $6 billion debt. Let's see how much interest that costs them a quarter. Their interest costed basically 70 million a quarter. They're paying in interest. UiPath going crazy right now on NVIDIA and OpenAI partnerships. Really? I do own that one. What was this last stock you looked at? I don't remember, but if you missed anything, by the way, I'm streaming on YouTube and you're able to like rewind it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But you can just type in YouTube Nathan Robert. I'm streaming on there. I think the last stock we were looking at was FUTU, if you were talking about the brokerage there. But yeah, UiPath is up 6%, not too shabby. I'm trying to get out. Dude, I am down bad on this stock. Check this out. We were down 35% on them, 50% on Zoom. We do have some losers, of course. So Dan said BBWI. Oh, wait, that we just looked at that one. Yeah, I'd be careful. That's like a mall stock, kind of like a Macy's. Thoughts on OBDC? Yeah, hey, this is that BDC right here. I don't expect this one to really outperform in the long run. Like this stock is lower than it was when it IPO'd in 2019. So, in 2019, when it IPO'd, it was $16 and now it's $12. But the reason you're buying this stock is to maximize your income. If we look at the dividend here, you get a 13% dividend yield. Now, this is a BDC, so they actually have to pay out 90% of their taxable income in the form of a dividend by law. So this abnormally high yield is actually sustainable. But whenever you receive these dividends, they're actually taxed as short-term capital gains and not long-term capital gains like your average dividend is. But yeah, you buy that to maximize income. You don't really expect to outperform. You should the stock should slowly kind of go down. All right. Let's see here. Shopify, too late to enter. It probably is too late to enter here, but I do love Shopify. I think, honestly, if you have the intention to never sell Shopify, I wouldn't call you crazy for nibbling a little bit on Shopify. But yeah, the risk reward doesn't look too great here. But they deserve. This is a stock that deserves to be at all-time highs because their fundamentals are so good. If we look at their revenue right here, this is the incredible part. This is what you call a growth stock. I mean, their revenue literally just hits a new record every year, every quarter. And they're not just growing their revenue, but they're also growing their profits. If we look at FCF, which stands for free cash flow, they're making a couple $100 million of free cash flow a quarter. They're making a couple $100 million net income a quarter as well. And look at this fortress balance sheet. This is great. So yeah, Shopify is a beast. I wish I owned them, to be honest with you. They're so great. So ENVA stock. Hey, thanks for the roses. Let's see. Enova. So this stock is pretty much at an all-time high. Yo, congrats if you own this one. Let's see. They're a $2.8 billion company at a 12 PE. I'm going to guess that this is a healthcare company, but let's see. Oh no, consumer loans and finance receivables revenue. The growth has been insane. Look at that. Revenue's up 16 after going 21, after going 20, after going 28. That is some growth on their main business. That's 56% of the revenue. And hey, Cigar, thanks so much for the rose there. I do appreciate that. And then over here, their other half of the business, 42% small business loan, that's also insane growth. It literally just hits a new record every year, every quarter. That's the kind of growth you want to see in a stock. So I can totally understand why this stock is at an all-time high. The growing fundamentals kind of align with that. And look at the analyst expectations. It's supposed to be 860 million. They're beating every quarter on the expectations. They're beating on net income every quarter. Yeah, no wonder this stock is at an all-time high. They have great fundamentals. Let me go turn on my fan. All right. Yeah, this is a good company. Like they literally they're making 70 million net income a quarter. These growth rates are very good. So they're expanding margins too. Yeah, their margin grew 16% year over year. Nice. Um, all right. Let's see. Can you look at Delek? Hey, what's the ticker symbol for DELEK? I don't know what that is. All right. DNN, what up? Rice Farmer said DNN. Oh, this is that gold play, Denshin Mines, I believe, or it's the uranium play. Wait a minute, I think this might be uranium. They're a mining company. Yep, I know that. Yeah, uranium. So this is a revenue-less uranium company. Well, let me see. Do they have revenue? Let me verify. Well, 900,000 of revenue a quarter. Here's the thing. This ETF, this stock right here literally looks exactly like this ETF, like almost exactly. So it's kind of just following the whole momentum of the uranium industry. Uranium's kind of popping right now because we just stopped buying Russian uranium. We're just trying to supply our own uranium and buy Canadian uranium. So, and we're also stimulating our nuclear reactors, which need uranium to function, to work. Truman said AAL. So American Airline, this stock, oops, wait, wrong company. Oh man. So American Airlines, I just don't love the airlines. Look at this. The stock is pretty much at an all-time low. I mean, there's the airlines get smoked in a recession. They never outperform. Like there's certain like funds out there that buy the S&P 500 but remove the cruise lines and airlines and they do great. Like you just don't want exposure to the airlines in the long run. They're super federally regulated. They don't grow. Like they're super leveraged. Like, look, they have more liabilities than they have assets. You know, they don't make consistent net income. Out of all the airlines out there, DAL, Delta Airlines, seem to be the best well run. But yeah, I just don't love the airlines, to be honest with you. STX stock. Wait. Oh, that's Seagate. Yo, this stock has been on an absolute tear. Look at that. That's an insane new all-time high on this company. What's the market cap? So it's a $53 billion company. Let's see. They've been beating on expectations. That's good news. Yeah, look at that. Revenue's up 29 after growing 20. The profit expansion. So you don't look at net income because there was this one-time adjustment that one quarter. You look at the operating profit, which doesn't include that. They're expanding margins. Revenue's up 29, but profits are up by 86. So I can totally understand why this stock is at an all-time high. And even though the stock is at an all-time high, this is actually crazy. You still get a 1.1% dividend yield with this company. So anyway, they're interesting. I don't know if I'd buy them at all-time highs, but I can understand why they're at that. So ticker for Delek is DK. Delek US. Let's check it out right here. So this stock has not done too well. So this stock is the same price that it was back in 2012. So do beware. This one doesn't really outperform in the long run. They're in refining. So all the revenue comes from the US. How's that doing? So yeah, this is not good. Revenue's down 17 after falling 18 after falling 27. That isn't great. So it's really cyclical. I can see why the stock hasn't done too well. Are they making money? So, and for the whole entire past year, they've actually lost net income every quarter for basically the past 2 years. So to be honest with you, nothing's really blowing me away here. We really want to see the growth come back. Yeah, that's tough. Yeah, I'd be careful with that one. Just because I wonder what industry they're in. Refining. Is that like steel or I don't know. Oh, it's an energy company. Okay, hey, thanks for that, PG. What up, dude? So, Tech Fam, what up? He said CMG stock. Yo, that's Chipotle. This is one of the restaurant stocks. A lot of the restaurants right now are struggling hard, and I feel bad. But yeah, look at Chipotle. Like they reported earnings and then they've just continued to climb down. And sadly, I wouldn't buy the dip yet on Chipotle. I think they might go a little bit lower. Here's why. I'll just show you the numbers. I'll show you what I kind of see here. If we look at their net income multiple versus the industry average, they're trading at basically 37 times PE or 37 times net income. That's okay to have a high premium as long as you're high growth, but they've been missing on expectations. It's a high PE, expensive company, but when you miss on growth, you miss on that's how you get the stock to gap down so aggressively. If we look this quarter, analysts are expecting 3.11. They reported 3.06. And not only look, if we look at the revenue, the lifeblood of the company, the revenue is only up 3% year over year. That just barely beats inflation. 3% revenue growth, but the net income, sales were up 3, but net income fell by 4. So that actually means they're losing their margins. Margins fell by 7. But again, it's not just a Chipotle problem, and I'm not blaming them. It's the whole industry. Look at Wendy's, for example. This is what's kind of sad. Wendy's is at an all-time low pretty much. Look at Jack in the Box, dude. Jack stock. Yeah. So, be careful with the restaurant industry right now. It's hurting Toast. McDonald's is the one exception, though. McDonald's is great. Why did PFE jump this month? Oh, yeah, the Pfizer CEO went to the White House, and there's new favorable regulation toward lowering. Look at this. Pfizer signs major pricing agreement with U.S. government, commits $70 billion investment. Pfizer to acquire Metsera for $7.3 billion, following positive weight loss results. So, hey, maybe Pfizer is getting into the weight loss prescription industry, but a lot of people like Pfizer right now for the yield. Check this out right here. You get a 6.2% dividend yield on Pfizer. So that's what the main value is. And here's how you can tell if the dividend is safe. So if we look at their net income this quarter, they made $2.9 billion in net income. Remember that. They made $2.9 billion in net income this quarter, and the dividend cost exactly $2.45 billion. So they were able to afford the dividend and even had a couple $100 million of leftover money. So that's good. That we always want to see them make a good amount more than how much the dividend costs. So as long as they're making basically $3 billion a quarter, they should be fine. And analysts are expecting them to continue that at that $3 billion a quarter level. All right. Barula said, what application are you using? Yeah. Hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. I love this app. Let's see here. Live again. Nice, bro. Hey, Tommy, what up, dude? Hope you're having a great Sunday. Yes, sir. This is our second live of the day. By the way, if you want to hit the follow button, we stream every single day, every Sunday at this exact same time, but we just stream every day. By the way, I sell nothing. I have no course, book, WhatsApp. I don't sell anything like that. So anyway, someone said the AC in stock. Now, this company, there is some positive news. I believe they just acquired a company, or let me go check out the weekly AI news right here if it would load. Let's see. Yeah, they're acquiring AI learning firm AI Demi or something like that. Anyway, they can easily afford to buy a company because if we go to their net income down here, and by the way, sorry guys, my Wi-Fi is terrible today. So if you wanted to follow on, we stream every day. But yeah, what up, Caden? Accenture is getting into AI. Yeah, check out their net income right here. This is how they're able to afford these acquisitions. This company literally makes 1.5 to 2 billion of net income every quarter, and you get a 2.5% dividend yield. So you're getting a nice yield. They're making good money, but we kind of want to see the growth come back because their margin did really fall. So if we look at the revenue grew by 7, but the net income fell by 15. And that wasn't some one-time adjustment. The net income really did fall by 15. So that I think is why the stock fell a bit. But you still get a nice yield there. All right. QDPL. What's this one? QDPL. This is Pacer Meteorus Large Cap Dividend Multiplier. Okay, let's see what it owns. Let's check it out. So it owns NVIDIA, Microsoft, Apple, then S&P 500 futures. So they're doing options. So they have a 5% dividend. That's more than SEHD, Amazon, Broadcom. So I think they might do some sort of options, but look at that chart. I mean, they've kept up with the S&P. They've definitely done better than SEHD with the higher yield. They're actually really interesting. I need to learn more about what options they do. If it's selling calls. Yeah, hey, we just looked at Chipotle. Someone said Kava. This is another stock just like Chipotle. The charts nearly look identical. Hey, J Dollar Sign, what up, dude? Thanks for all the goats, the gifts there. Oh, Tesla stock. Yeah, we'll get to Tesla. I don't have much good things to say about that stock, unfortunately, but we'll check it out. But yeah, Kava stock. This is another restaurant right here. Again, all the restaurants are being hurt. We just looked at Wendy's and Jack in the Box and Chipotle. They're kind of just following what the industry is doing. This one's the revenue is doing pretty good right now. The revenue's up 20 after going 35. Profits are up 26%. So fundamentally or financially, this one's pretty good, but the valuation is still high. Like I think this one's trending down. Like Chipotle, the valuation is still pretty high on it. This company trades at like 50 times net income. It's tough to pay 50x net income, but they're expected to grow, of course. So you probably want to do a forward multiple. Amanda said SoFi. Hey, remind me to look at SoFi. I really want to get to that one, but I want to get to Tesla first. Thanks again, J dollar sign, for all the goats there. So yeah, we'll get to Tesla. This company, about $250 of what you're paying. If you look at the stock price, or probably about $200 to $250 of what you're paying is literally the future, a future story of robotaxis and robotics. And it's a tough premium to trust right now. The risk reward doesn't look good on Tesla, in my opinion. The multiple is insane, and it's the future really paying for it. But yeah, they trade at 255 times net income. It's okay to trade at 255 times net income if you're really growthy, but Tesla just lost all its growth. If we go to their main business, their automotive segment, which is 88% of the revenue, it's down 12% year over year, down 15% the previous quarter, down 5%. Like this isn't really a growth company anymore. And if we go to their other business, the energy business, that also declined 7.5% year over year. So it's tough. Sales are down 12, net income's down by 58%. The margins are collapsing on Tesla. So stock's doing great for momentum. Now it's the market to kind of own Tesla, but to trust it fundamentally, it's definitely super over, like not financial advice, but it looks definitely overvalued. Just the way I analyze stocks. What's this app? Oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. This is where you buy stocks on. It's actually a brokerage. Yeah, my favorite one. Let's see. Tesla is an AI play, or yeah, robotics play, robo-taxi play. But it's a tough premium to pay, I think. Just my opinion. I think it's worth maybe a small position, but oh yeah, I wanted to get to SoFi right here. What up, Preston? Remind me to get to TTWO. I do like Take Two. So, remind me to look at ASML, Verizon or Train Technologies. Are you talking about AT&T there, Looney? I would definitely pick Train Technologies. I love that stock. So here's SoFi. I do own this company. I might be biased, but this company, in my opinion, isn't just propped up on momentum. It's at all-time highs, or it's had this crazy rally because of their good fundamentals, and that's what justifies the upside. Like more so than Tesla, I think. Like check this out right here. Their financial services, this is what you want to see for a growth company with the high PE. The revenue's up 105% after growing 80, after going 222, after going 260. So the growth has been insane here. It just hits a record every year, every quarter, not just their financial services, but also the lending revenue. That's up 30% year over year, also to a new record. So pretty cool. And, I just really think people are starting to take SoFi serious, they're making a bunch of net income every quarter. And look at the analyst expectations. The orange lines, what the analysts expect. Every quarter, they're beating on expectations. They're beating on revenue every quarter, beating on EPS, which is net income every quarter, and EBITDA. So really nice numbers there on SoFi. Would I buy it here? Probably not. It's still a bit expensive. And here, I'll show you my position in them. Let's see. What's up on the day? UiPath is up 5.5, or actually 6% now. Robinhood's up 2%. No way. And SoFi's up 1.1. Yeah, that's a stock every share I've ever sold of. We're up 300% on our SoFi. So yeah. Well, we're almost up 1,000% on Robinhood. That would be insane, dude. They're at a new all-time high right now. All right. Let's see. Hello, I'm 19 years old and was wondering how could I start investing in stocks? Yeah, hey, that's awesome. You're wanting to get to stocks. To buy stocks, you need a brokerage to buy it on. If you want it, the one I'd recommend is just the one I'm on right now. If you want to get this one I'm on, it's in the link tree in my bio, the first link there. Yeah, you just buy some stocks. I'd recommend just buy the S&P 500, buy companies you know and love. So BTish said ESP stock. What is ESP? This is SB Manufacturing and Electronics. So let's go look at their fundamentals here. Ever since earning, they gapped down on earnings. So investors didn't like something. Let's go figure it out. Oh, so there's no analyst covering their earnings. What's the market cap? Oh, so dude, this is $100 million company. So this is some micro cap. But, you know, this is good news. Out of all the $100 billion market caps, they are making net income every quarter, 1 to 2 mil of after tax net income, which is good. Ooh, but this is the one thing that scares me. Revenue fell 17% year over year. So revenue's down 17, but the net income did grow. Was that from interest or I don't know. Anyway, I'd just be careful. They're trading at 12 times net income. That's interesting. Out of all the $100 million market cap names, that seems like one of the better ones out there. So let's see, SSNC. What's this one? SSNC. And hey, then we'll look at INVX. We'll try and get to these. So SS&C Technologies, they're at an all-time high. They're a $21 billion company. Let's check them out. So let me see what industry they're in. Software application to the financial sector. All right, let's check this out. So revenue's up 5% year over year. The mid-single digit growth right here. 5, 5, 8, 7, 6. So single digit growth. The net income though, well, you really look at operating profit. Actually, the operating profit did grow with this. So they are actually making a good, basically $200 million of net income a quarter. And you get a 1.14% dividend yield. So you get a 1% yield here. Where's the revenue come from? 69% of the revenue comes from US, then UK. What's the margins? 10% margin. All right, so they're growing mid-single digits. I don't know if that one will really outperform in the long run, but that seems pretty good. Seems safe. NWPX. Wait. INVX. What's this one? Innovex International. These are some weird tickers. So a really small one as well, a $1.2 billion company. The stock is at its 2006 low. So if you bought the stock in 2006, you're actually down on your position. So let's see what this company does. So US and Canada onshore. Do they have sales? They do. So revenue's up 72%. That's incredible. They have a really good balance sheet as well. And they're making net income every quarter. Are they in the oil and gas industry? Yeah. So this is an oil and gas company making net income every quarter, growing their revenue very fast with a really good balance sheet. This is actually not too bad of an oil and gas company from a fundamental point of view. But again, these oil and gas names really don't outperform in the long run. If I want to exposure to oil and gas, I'd probably go with like a Chevron or an Exxon. Probably like that. NASDAQ Robotics. What is NASDAQ Robotics? Young Zell said DFLI. What is DFLI? Dragonfly Energy. So, wow, they were up 76% on Friday. Oh, but before that this was a $30 million company. Now they're worth $100 million. So something happened. Was it pure momentum? Guess we can check the intelligent comments here. I haven't sold and made 55. Okay. News. I don't know if there was any specific news to make the stock go up 76% because revenue's up 23. They're losing 7-8 to. So when you're worth $100 million, losing $7 million is like losing 7% of your entire company. And they have more liabilities than assets. There was just some sort of good news here. Looks like a momentum stock. I'd be very careful with that one. That looks like Webull. Hey, I do have a Webull as well. I do like Webull. All right. Hey, what up? Yeah, Bobby said, can we do Path? You know what? That's one of my biggest losers. Check this out right here. We are down 35% on UiPath, but good news, they are up 6.5% in the overnight market. That's really a stock I'm actively trying to get out of. There was some good news, though. They just partnered with OpenAI and with Google and NVIDIA. So let me actually see if there's news down here. Yeah, UiPath formed strategic AI partnerships with major tech companies. And UiPath launches a voice-enabled conversational agent with Google Gemini integration. So, hey, maybe that'll give Google some money. Again, I own this one. I'm down 36% on them. I haven't had the great experience with them. Like back here, literally what happened on this day was the CEO quit. Like the earnings were good, but the CEO quit out of nowhere, left the management for dead. But the stock is kind of doing better now. I wouldn't put that as like a huge position. They kind of don't have too much of a moat. They really need to innovate fast, and it's good to see them doing that right now. How many stocks do you have? Yo, what up, Northern Jays? Probably too many. Probably like 30 to 40. To just because I enjoy doing this, I never recommend, someone have this many stocks that I have. But I just love individually picking stocks. All right, let's see. Oh wait, let me look at wait. CARR. Let me look at CARR stock. What is this one? This is Carrier Global. Oh, I think this is one of the shipping companies. So if anyone's heard of Zim before, I think this is like a competitor to Zim. Oh, never mind. No. This is that eight. Oh, yeah, this is that HVAC company. Hold on. So check this out. Climate Solutions Americas. That's up 13%. They're like an HVAC play. Climate Solutions Europe, Climate Solutions Asia Pacific. If we go to the net income right here, at least they're making good profits. You really look at the operating profit because they had this little one-time adjustment, but they're making a couple $100 million net income a quarter, and it's growing nicely the past 4 quarters. So that's good. Deleveraging the balance sheet. So. And pretty cool, you get a 1% yield here. Look at that. That's a safe payout ratio. I'm going to re-add this one to the top of my watch list because I do like the HVAC plays, but I do want to point out something. I see slowing sales growth. Let me actually check that out real quick. So do beware right here. When we look at their sales are only up 3% year over year. And last quarter, it fell by 3%. So we do want to see some more growth year numbers. That might be why the stock is kind of falling. Oh yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, or I'm not sure. If you want to get any of these brokerages I'm on, they're all in the link tree in my bio. They're all affiliate links, full disclosure. So if you like sign up and deposit $100, we'll both get like some free shares or something. So yeah, this app I'm on right now is the first link in the link tree in my bio. That's the one I'd recommend the most. All right, so USO might be a better oil play. Oh, that's just United States oil. So this is you get a K1 tax form. This is one of the. This is like the commodity. This isn't even like a company. This is probably not the best way to get exposure to oil. You'd rather buy an Exxon, a Chevron, something like that over this. And you get an K1 tax form with that. I don't love USO. I would go with like you who loves oil and gas stocks is the homie Buffett. If we go to the Warren Buffett portfolio over here, 6% of his portfolio is in Chevron. Another 3.8% is in Oxy Petroleum. Like, look at Chevron right here. It's done a lot better than that USO. And on top of the stock price appreciation, you get the dividend, a 4.4% yield on Chevron. Not too shabby. What's your favorite quantum computing stock? Probably Google or IBM or Honeywell. I'd stay away from the Qubits, the RGTI, the CLSQ. There's a lot of momentum quantum trash out there. Hey, what up, Mo? I forgot I was with you today, Sunday. Thank you for doing it. Hey, no problem, Mo. Hope you're having a great Sunday too. Is it true that if you're holding a stock and try and get one with the high dividend? I don't know what that means, Jeremy. I wouldn't go for a stock that just because it has a high dividend. I like the dividend growth. Like, look, my largest holding right here, Comfort Systems. We have basically $10,000 in this name. The dividend yield is pretty much nothing on this stock. The dividend yield is a 0.18. I like the dividend growth companies. But, hey, what up, Caden? Shout out to Caden. He said Coca-Cola. You know what? Speaking of Warren Buffett, let's go back to his portfolio. Why not? Because one of his better picks has actually been in Coca-Cola stock, ticker symbol KO. 8.7% of his entire portfolio is in this stock. And the main reason you like this name is because of the dividend and the dividend growth. So you get 3% of your money back just in the dividend every year, and they slowly raise their dividend every year to keep up with inflation too, which is pretty cool. And they've been raising their dividend for over 50 years. They're making consistent net income, $2 to $3 billion a quarter. Then they just share it with you via dividends. So Coca-Cola is a nice. That being said, I would not expect Coca-Cola to outperform the tech-heavy S&P 500 in the long run, but it's still a nice dividend stock to have exposure to. I just chugged my tea. Okay. All right. What's this one? TDG stock. So, hey, what up, D-Taj? Hey, how's it going? By the way, if you want to help me out, don't forget to hit the like button and watch out for people impersonating me. I sell nothing. I have no course, book, WhatsApp, Telegram, nothing like that. So here's Transdigm or something. I don't know what this is, but they're a huge company. They're a $72 billion market cap, but it looks like they gapped down on earnings and then gapped down some more. Was that from their special dividend? So, whoa, they did a $90 special dividend. Whenever a stock pays a dividend, by the way, like the stock literally went down by exactly $90 because they paid a $90 special dividend. That's just how the math works. Whenever you pay a dividend, the stock instantly goes down by that amount. That's why the covered call ETFs are tough. But yeah, $90 special dividend is crazy. They're a power and control and airframe company. It looks like this is in the aviation industry. Look at how this is some nice growth. 8% growth after 16, after 35. Power and controls up 10 after going 20, after going 16. So yeah, they're on a nice little growth streak and they're making good money. They're pretty much making $500 million of after-tax net income a quarter. So interesting. That's how they can afford the dividends, Chevron is on fire in LA. Really, stocks? I didn't know that. Really. Luke said TYL stock. Tyler Technologies. Hey, what up, dude? So let's see. Hey, this stock's actually done really good since 2019. But it's been struggling the past couple of days here. Let's go see if we can figure out what happened here. They no longer pay a dividend. All right, let's see. Enterprise software, how's that growing? That's actually growing very nicely. It's at a new record, up 14% after 9. And their platform technologies is up 1. So that's beating overall expectations. The orange lines what the analysts expect. They beat on revenue. They beat on net income. They beat on EBITDA this quarter. Yeah, they're making good net income. Pretty much 80 million in net income a quarter, and it's growing. So at this growth rate, what's it going to be the same time next year? But unfortunately, the stock has been struggling a little bit. What's the multiple? Maybe it's just because they have a high multiple. Oh, so that's probably it. Probably just getting back down to reality. They're trading at 71 times net income. Maybe that's a little expensive. Maybe they need but still, I like that one more than dislike. So Preston said TTWO. Hey, Jeremy, remind me to look at Rocket Lab. You can spam it. I want to look at Rocket Lab. And Goated said, what app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But here's Take Two. This is the company that owns Rockstar Games. So if you've heard of GTA 5, Red Dead Redemption, Rockstar Games, this is the stock that owns that. And one of the reasons why the stock is pretty much at an all-time high right now is because they're about to release GTA 6. They're anticipating, as soon as they release that game, they're anticipating billions of revenues just going to instantly flood in. So that's what is kind of being priced in, the fact that there's a lot of future revenue that's going to hit this company. But that's the thing. I think everyone knows this at this point. It's pretty much fully priced in. I don't think there's any analyst out there that doesn't know about this. So I wouldn't buy this one here. Certainly not at this all-time high level, but they're certainly worth watching, especially if you like games. What's another cool game company? If you are a gamer, here's a great game stock for you. And if this was an American stock, they would be a Mag 7. This is a Chinese company. They're Tencent, but you won't believe what they own. I'll be super quick. They own Supercell. So they think of Clash of Clans, Clash Royale. They own that. They own 50% of Epic Games. And Epic Games owns Fortnite. They own a bunch of other games. So they own 50% of Epic Games. They own Supercell. And they own Riot Games. So if you've heard of League of Legends, if you've heard of Valorant, this stock owns that. And also, you ready for this? They own PUBG. The list goes on. I kid you not. This is if this was an American company, they would be in the Mag 7. It's an $800 billion company. So anyway, that's Tencent. Pretty cool. All right. Thoughts on selling covered calls? I like selling calls on certain assets. NHMI. What is NHMI? Wait. Oh, wait, NMIH. Wait, I cannot type. NMIH. And then we can look at, Starbucks. Starbucks is struggling right now. Yikes. Yeah, we'll maybe look at them. So this company is NM Holdings. What do they do? Let's go find out. So this is, an insurance company. So they do insurance. Interesting. Let's see. They're making good money every quarter. Pretty much $100 million in net income a quarter. Sales are going high single digits to double digits. That's good. Making nearly 100 million in net income a quarter. So decent balance sheet too. What were the sales growth again? So Yeah, revenue's up 7% year over year. That's not too bad. I don't know. Nothing's really blowing me away here. Like net income's up by 4%. So their margins actually did fall year over year. They have insane margins. First of all, 55% net margin. That's whatever they sell, they're making crazy money on. I don't know. I got to do more research on this one. It's like a mixed bag there. I want to see more growth, but I love the margins. Someone said Starbucks was a top pick by Yahoo Finance. Well, let's check out Starbucks right here. Here's why I wouldn't buy this one right now. I'd rather buy McDonald's. That's a great company, but their financials explain this. If you're wondering why is Starbucks lower than it was 6 years ago, so you buy the stock 6 years ago, you're down on your position. That's because they lost their growth. Competition's eating them. Luckin Coffee is stealing market share. But look at their net income. Their margins have collapsed. With tariffs and commodity price inflation, coffee beans have gone up a bunch. So if we look at their net income right here, and this isn't like some one-time adjustment either. This is real. The net income fell 50% year over year. The last quarter was down 50, then 20. But look at this number right here. They're still making net income every quarter. They're still making a couple hundred million. Not really though. Technically, if we look at this quarter, here's what I mean. They made $558 million of after-tax net income. Remember that. They made this quarter $558 million of after-tax net income. Remember, Starbucks also pays a dividend, and the dividend cost literally $693 million. They couldn't even afford the dividend this quarter. So yeah, they made $558 million, but they had to pay out $690 million in dividends. So they actually lost money. So Starbucks is in a tough position where they honestly need a healthy dividend cut. Phone chargers, dude, you're right, dude. My phone is low and it's lagging. I apologize. NWPX, what's this one? NWPX Infrastructure. They're a $500 million company. The same price as they were back in 2008, but that's all right. Let's see what their fundamentals are because they just rallied up like crazy. Water transmission systems, that revenue's down by 5%. Precast infrastructure, that's up by 21 though. So overall, they had a big beat on revenue. Analysts expected 120. The orange lines what the analysts expect. Huge beat on revenue, huge beat on net income, and a beat on EBITDA. So it was a good 30% beat across the board. So even though the sales were up 2.84%, that barely beats inflation. The sales were only up 2.8. That was way better than what the analysts expected. So that really explains why the stock gapped up so much on earnings. And even though they're still only right now trading at 15 times net income and the market cap's only 500 mil. I'll actually put them on the watch list. Thanks for that one. I like that one. Thanks, Lee. All right, so Feeling Froggy. Hey, try not to spam there, but let's check this one out. He said GTVH, Golden Triangle Ventures. So look at each share cost 0.0009 cents. So sadly, we're not even going to cover this company. It's not worth even talking about. If you look in the top right, this whole company is worth $3 million. Like this is like, I don't know what, there's no value there. That's like flipping a coin or even worse. So yeah, $3 million company at all-time lows. Super careful there. Not financial advice. VCIG makes 33 million. Wait, VCIG makes 33 million in income, but are only worth 9 million. Let's see if we can figure out why. So you're right. Look at that. In the top right, they're only worth $9.2 million, and the stock's at an all-time low. Let's see if we can figure out why the stock is at an all-time low. So let's see revenue. So look at that. For the full year 2024, they did 124 million in revenue. That's actually really good. 124 million in revenue, and they made net income on that. You're right. That's actually really weird. They made 33 million in net income for the full year 2024. No analysts cover this stock. What are they in? Consulting services. Well, that's really, oh, wait, hold on. Whoa, hold the phone. We're looking in the wrong currency right now. So we're going to convert this from MYR. We're going to convert that to USD. Let's actually get a better picture. So, okay, this makes a lot more sense. Kind of. Well, this is still good. I mean, the whole company for the full year 2024 still made 7.6 million. It's still positive, which is good. It grew 4.5%. It's actually, yeah. They have a really good balance sheet as well. Let's see. Now that we're looking in USD, well, $8 million of cash Wait, 8 million in cash and the market cap is 9 million. That's interesting. There must be something that we don't know there. Do the company I work for, which is Cipher Mining. Hey, what up, Jason? Give me the ticker symbol for that and we'll check it out. Check that out for you. Someone said Rivian, please. Yeah, you know who owns Rivian? If you ever go outside and see those Amazon electric Rivian vehicle trucks, Rivian makes those. Unfortunately, the stock is at an all-time low because they burn through an unsustainable amount of net income. But good news is they're backed by Amazon and Porsche. Amazon is the largest shareholder. Amazon owns 13% of all the shares, and Porsche owns 12% of all the shares. So that's really interesting that they're backed by those people. But the one thing that scares me away from this company, buying them individually, I own them through Amazon. I own Amazon shares, but these net income losses, like they lost literally 1.1 billion in net income this quarter, 500 mil last quarter, 700 mil, another 1.1 billion. Like they're losing 3 to 4 billion in net income a year. What's the market cap? 16 billion. It's good thing they're backed by Amazon. If they weren't backed by Amazon, like wouldn't even be talking about them. But I don't love them as an individual investment. They're just not profitable. And I don't really love touching stocks that aren't profitable. They're like nowhere near close to profitability either. That's the one thing that scares me a little bit. What assets do you like covered calls on? Things that aren't like you wouldn't want to sell calls on Bitcoin. You wouldn't want to sell calls on the NASDAQ. Well, you could. You'll get a super high yield, but you're most likely going to get called on that position. Someone said, yo, Hobby said, what app is this? Yeah, hey, by the way, this is a brokerage right here where you buy stocks on. If you want to get it, it's in the link tree in my bio, the very first link there. If you're on the YouTube stream, it should be in the link in the description. I also put it in the chat there. But let's see here. Soundhound. Ooh, remind me to get to Soundhound. EVGO. The thing, this is kind of I think this is that. All right. I think this one might be junk. Let me go verify if this is that EV company. Well, it's not. Actually, this one isn't too terrible, but not great. $1.5 billion company. They lose 30 mil a quarter, so they're losing 200 mil a quarter. But if we go to the revenue, they actually have growth. And that's actually the great news. The fact that this is super growthy. I'm actually thinking of, I'm thinking of, dude, is it Go EV? Don't tell me. Yeah, Go EV. That's what I was thinking of. It's like the inverse. That one's at all-time lows. Dude, I was thinking of Go EV. But this is EVGO. It's like the reverse ticker symbol. All right, so let's see. This must be an electric vehicle company, electric vehicle charging station. So this is an electric vehicle charging company. The revenue's been very nice. Revenue's up 47 after 31 after growing 400. They're not profitable yet. But there you go. I lost a lot of like Blink Point Charging, Charge Point. Those two basically are bankrupt. And Tesla has their charging network. Tesla's a good charging network play, but that's a pure charging network play. That's kind of a commodity. Selling electric vehicles, electricity. I don't know how high margin they can get, but interesting. Let's see. Is it Rivian coming out with that full custom truck? Oh yeah, I saw that, Rivian, that you're right. Oh yeah, Jeremy, I forgot to get to this one. Rocket Lab. Yo, so Rocket Lab right here. This stock is one of my favorite space companies out there. Remind me to look at Soundhound. I want to get to that one. And yeah, hey, MX, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there, MX. So this is where you buy stocks on, where it's a brokerage. But Rocket Lab is at an all-time high. It's not just prompted by momentum. They're at an all-time high because they have good growing fundamentals. They also just acquired Geost and another company, which is going to add even more growth to this. But check this out. Their main business, their space systems revenue is growing very crazily. Revenue's up 28 after going 94 after going 9. So the revenue just continues to hit record after record. And not just that business, but also their launch services. It's never been over 45 million before. Crazy new record, up 58% year over year. So Rocket Lab is just a good growth company. They're better than ASTS. They're better than Lunar. But you watch the net income numbers. They're still losing like 50 mil in net income a quarter. But the fact that they're so growthy, beating on expectations, the orange lines with analysts expected, beating on the growth expectations. They just acquired another company as well. I don't know if we'll be able to find them. Rocket Lab secures major contract extension with Synspective for satellite launches. Pretty cool. Okay. Ooh, Decker's Outdoors. Yeah, let's check this one out. Is it? Yeah, it is, MX. It is. So here's Decker Outdoors right here. Oh, remind me to look at Grab. Hey, Datadog. Hey, DDOG. That's a ticker symbol as well. Remind me to look at Grab. I really do like that one. That one's like backed by Uber, which is pretty cool. Rivian has a few vehicles coming out soon. Hey, that's great news. That should help out with their future growth. Hopefully, they're selling those vehicles for a profit as well. I know the EV tax credit expired on October 1st, which is unfortunate. That's going to hurt probably Tesla too. But here's Decker Outdoors. This is a shoe company that's taken a lot of market share away from Nike. I think they own Hoka. Or yeah, look at that. Hoka is 67% of the revenue, and they also own UGG. Hoka is like a really comfortable shoe. I think they're like a running shoe sort of focused, but check this out. This is what's unbelievable to me. Like they're really taking market share away from Nike after Nike ended all their partnerships with retailers. Like this is insane. You know, the growth rates, not just the Hoka brand, but also the UGG. Look at that one as well, up like crazy since 2019. So UGG is growing very nicely, and Hoka making a couple $100 million net income every quarter. Basically they report in fiscal year. I don't like when companies do this, but basically Q4 of our calendar year, super profitable for them is when they make their main money. So yeah, actually I really like that one. They sell a commodity, but a lot of, again, this is like, they're falling for like the Lululemon. Like a lot of the apparel names are struggling. Nike, Under Armour, Lululemon, Louis Vuitton, Gucci stock, they're all struggling. D Herb said what happens is, yeah, hey, D Herb again, or anyone, if you guys want to get this app I'm on, it's in the link tree in my bio, the first link there. All the apps are linked up there if you wanted to get any of these. There are affiliate links too, full disclosure. Let's see how the market's doing. Yeah, I forgot. We haven't even looked at the market. Let's see. So we are up, or we're down. We are down 0.1% right now. Let me check the NASDAQ. Hey, Qs are green. Qs are up 0.25. Nvidia's up. Apple's up. Whoa, dude, Hood. Whoa, Hood is up 2.25. We might be up 1,000% on them. We're so close, dude. We're up 994 on Robinhood. That's crazy. Okay, let's get back to the analysis though. Oh yeah, Sound on AI. Let's get back over here. So SOUN. So this company is a AI audio subscription play. If you are an investor in this stock, there's really one thing you want to heavily watch, and that's their subscription revenue, because that's most of the revenue. And this is booming. This is why the stock has rallied so much, because a year ago, this was a big nothing burger. The revenue was 400,000, nothing a quarter. But now these growth rates really beat expectations. The revenue is up to 32 million, up from, basically nothing. So incredible growth over there. And look at the orange line. That's what the analysts expect. Huge beat. Revenue was expected 32. They expected 32. They reported 42. They are still losing money every quarter, do beware. But as long as they can keep up this growth rate of the sales, like that's insane, 200% revenue growth, I think they're worth watching and still holding on to. They're beating on expectations. Some AI audio subscription company. I wouldn't have it as a huge position. I wouldn't trust too much money in that stock. I'd maybe keep it as a small little position there. So let's look at, TWIN. Is that a stock there? Let's see. Twin Disc. It's a 200 mil. Oh, wait. Yeah, we got to look at Grab. We got to look at Grab after this. Yeah, hey, Grinds. Sorry, people keep asking. If you want to get this app I'm on, again, link tree in my bio, the very first link there. I'll probably pin a comment or something eventually. So, hey, MX, no way you're using an account. Use my link. Hey, I really appreciate that, MX. I'm actually going to give you a follow. I appreciate that. But anyway, here's Twin Disc. This company's a $200 million market cap. They're a manufacturing company. So, let's see how that's doing, actually. So 86% of the revenue is their manufacturing business. And come on. Sorry, my Wi-Fi is a little trash tonight. So it would load here. Might not. All right. Okay. Well, actually, there it goes. It's up 10% year over year after going 1%. And their distribution business, that's up 12. Or let's just go down here. Revenue is up 14 after going 1. And they're struggling with net income positivity. Like they make money, then they lose money, make money, lose money. Where's the stock? Yeah. I'd be careful with them. $200 million market cap. At least the good news is like they are growing. Sales are up 15, but the net income fell by 80. Was that real? Let me go to operating profit. Actually, no, the operating profit did increase. I just don't know. It's just a small one. I'd be careful with them. Wouldn't have a lot of money in that 200 million market cap. Oh yeah, hey, it's the very first link there. It is Moomoo. Yes, sir. Let's see here. Looking to buy Reddit, Uber, and adding SoFi this week. Your thoughts? Oh wait, we got to get to Grab. Speaking of Uber, this stock is backed by Uber. Yeah, let's look at Grab right here. If you're wondering what is this stock, and remind me to look at SoFi and Uber. I want to look at those other ones, but Grab is literally They do the exact same thing that Uber does. Delivery, Uber Eats, all that, but they're in all or not it's not called Uber Eats, but they do exactly what Uber does, but in all these other countries. Notice the US and Canada isn't on here. Look at that. 30% Malaysia, Indonesia's 22, Singapore 20, Philippines, US and Canada aren't on here. That's why I think it was genius for Uber to buy this stock. Uber is literally the largest shareholder. 13% of all the shares are owned by Uber. And then Toyota Motor owns another 5.5%. So pretty cool. They also have no net debt. They're growing very nicely. Sales are up 23 after going 17. And analysts are expecting the revenue to just continue to climb higher. So especially with them being backed by Toyota and Uber, I love that stock, man. Yeah, Grab is cool. Pretty cool. Thank you so much. I'm just getting started and I would like to swing trade. Look, after looking at yours, are you a long-term holder? Yeah, mainly, I have a swing trade portfolio right here. Like sometimes I'll buy and sell stocks in under a month or something. But mainly like this portfolio right here, I've dedicated. Yeah, if you look at the very top left there, it's called my buy and never sell portfolio. Because once I buy a stock in here, I really try and just never sell it. I don't take any profits or anything. So, XPRO. What is XPRO? So this is Expro Group. This company is at an all-time low, but let's see if we can figure out what happened here. They're a $1.4 billion company, but they're trading at a fair multiple, actually. Let me go to PE right here. Yeah, so the net income multiple is a 20, but the industry average is a 13. What industry are they in? Let's see. Schlumberger. So this is an oil company or something. Yeah, oil and gas equipment. So Schlumberger is their biggest competitor. Let's see. So the revenue did fall by 9%, but that's just because of the price of oil has been down. So yeah, if we look at profits, they're not making much profits. Do they pay a dividend? They don't pay a dividend. That's good that they don't pay a dividend because I couldn't expect them to with this little profits, but at least they're making net income every quarter and the revenue is only down because of the price of oil is. So, hey, not too bad. But oil and gas play, I don't know if that'll really outperform. I don't love like Schlumberger either. I like Chevron and Exxon. What apps you're using? Yeah, hey, NC Patriot. If you want to see all the apps I'm using are in the link tree in my bio. I'm not sure which one you're talking about. But yeah, all of them are linked up there. Robinhood, Webull, Moomoo. So yeah, let's get back to SoFi right here. I do own SoFi, by the way. This is a great stock to buy and never sell, in my opinion. But I wouldn't make it a huge position. Like for me, it's a $600 position for me. I regret every share I've ever sold a SoFi, but this is the kind of stock that's not momentuming higher. It's going up higher because of its good growing fundamentals. This is a fintech right here. They have their own banking charter. They got it through a loophole that's now patched because of them. Their financial services are growing insanely. Like this is what justifies the crazy high multiple. It's not even crazy high. The revenue's up 105 after going 80, after going 200, after going another 80. Like the growth is just insane. There is no red. Like there's no red decline numbers. It's insane. And not just their financial services revenue, but also the lending side, their loans. That's up 30% year over year. They're just beating on expectations. Like check this out. The orange line here is what the analysts expect. They're beating on revenue, beating on net income, beating on EBIT every quarter. They did $850 million in revenue. Out of this $850 million revenue, $100 million of it was after-tax net income. Pretty cool. So yeah, that's SoFi. I might be biased because I own them, but yeah. Just subscribed. I'll be staying up with you. Hey, thanks, yo. We'll probably be streaming for another hour. So yeah, if y'all want to hit the follow button, by the way, we stream every Sunday at this exact same time. We stream every single day. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Watch out for people impersonating me. So let's see. How often do you go live? Yeah, I go live every day. So someone said Kava. This is one of the restaurant stocks that have been struggling right now. Kava literally does exactly what Chipotle stock does. They're just a little smaller. This one just trades at too high of a multiple, especially for how restaurants are doing. They're trading at 54 times net income. They're like a smaller version of Chipotle. And look at Chipotle stock. They're also struggling. It's actually just because the whole industry is struggling. Hey, Datadog, thanks for following. I appreciate that. Yeah, here's Chipotle right here. Also, huge decline. We'll look at Wendy's as well. Look at Wendy's, man. Wendy's has done terrible. Krispy Kreme, which is DNUT, donuts at an all-time low. So it's not just Kava specific, but one reason I think that this stock is falling down is because they're following the trend of everyone else in the industry, and they're still trading at a high multiple. Like if you go to the PE, again, they're trading at 53 times net income. The industry average is 27. So it's tough paying its premium right now. And I'd probably rather buy Chipotle just because it's bigger and safer. Completely new to this, looking for something to get in relatively early and hold for a while with expected high growth like Bitcoin 10 years ago. Yeah, hey, Caleb, not financial advice. I just recommend the S&P 500. Buy and hold the S&P 500 for 10 years and you will be pleasantly surprised. But then, after buying that as the backbone of your portfolio, pick and choose some individual companies that you know and love, like maybe Google, Meta, Amazon, Coca-Cola, whatever you like. Costco. I see someone say Costco. Costco does have a high multiple. Let's see. Yum Brands. Hey, here's a restaurant stock that's amazing. So this is my second top pick besides McDonald's. McDonald's is the number one pick because they're a real estate royalty company that is recession proof almost. But here's Yum Brands right here. This is the company that owns KFC and Taco Bell, and I think Pizza Hut as well. Yeah, look at that. 44% of the revenue is KFC. Taco Bell's 36, Pizza Hut's 12. This company used to be owned by Pepsi. Did you know that Pepsi used to own all those restaurants, but then they spun it off, but there's a lifetime contract. So that's why if you ever go to KFC or Taco Bell, you ever notice they only have Pepsi products? Like they're always pushing Mountain Dews and stuff like that. That's because they have a lifetime contract with Pepsi to only sell Pepsi products like Mountain Dew. But anyway, I love, Taco Bell's. I love Taco Bell. I love KFC. Taco Bell is probably second best value behind McDonald's. So yeah, that's a great pick. Matthew said, what app is this? Hey, if you want to get this app I'm on, Matthew, it's in the link tree in my bio, the very first link there. What do you think of IREN or XP? Wait, let's look at XPEV. Yeah, we already looked at NIO. And here's another kind of electric vehicle Chinese company. NIO and XPeng are very similar. So here's XPeng. This one, like trying to make flying cars or something. Let's see, is there any news around here? XPeng reports record Q3 deliveries with strong growth in European expansion. Oh, no way. EU's letting Chinese cars. I forgot about that. They need to tariff the Chinese cars before it eats their market because they're cheap and they're good and it will ruin. Like if we didn't have tariffs on Chinese cars, they would be all over the US because they're quite frankly, they're cheap and they're good for the price. But check this out right here. If we go to the net income, actually, they've really narrowed their losses. This is great news. They've only lost 66 million. Like the growth is insane. Wow. Revenue's up 128 after going 60, after going 21. So the growth is back and they've really narrowed these losses. That's the most impressive part. If you look at NIO, Rivian, Lucid, they all burn through net income in like an unsustainable amount, but they're not burning too much. Jim said, what do you think of IREN? This is Iris Energy. This is a company that is they used to be a Bitcoin mining company, but now they're a data center hosting business. And if you're ever looking at a stock and you see, whoa, they've had an incredible rally. They're at an all-time high. Usually the reason they're at an all-time high is explained by the financials. So if we go to the revenue right here, this is what justifies the insane, stock price appreciation, the insane revenue growth. And that was beating expectations as well. But look at this, the revenue's up 229% after it grew 104, after it grew 120, like the revenue just hits a new record every quarter in tremendous revenue growth. And not just revenue growth, but they're finally making after-tax net income. For the past 3 quarters, they're net income positive when they used to lose money. Good growing balance sheet as well. So everything about IREN's fundamentals are headed in the right direction, explains the stock price going to the moon. I think so. So Judge Jude said BRKB. So yeah, that's actually Berkshire Hathaway. So if you are looking for like an S&P 500 alternative, this is like Buffett's portfolio of, companies that he picks to try and beat out the S&P 500, and he has successfully done that so far. He owns a bunch of different companies. On top of all the stocks they own stakes in, like they own stakes, of course, in a bunch of different companies like Coca-Cola and all that. But this right here is the cool part. Look at this. 28% of the revenue comes from their insurance company, which is Geico. Did you know Geico is owned by this company? We actually just switched to Geico. We now have this app on our phone where it it detects when you use your phone while driving, and it saved us a bunch on our car insurance. Anyway, they're in insurance, manufacturing, McLean. Oh yeah, they own Pilot, the Pilot gas stations. They wholly own Dairy Queen. Like they own a bunch of different. Anyway, that's like a S&P 500 alternative. Another kind of cool portfolio. User said, "What app are you using?" Hey, again, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So someone said, "Oh wait, hey, that one dude, are you talking about CSU Constellation Software?" This is, I think the CEO just stepped down from this company or something, but this is a company that's a serial acquirer. There's a few of those that I've seen, but they just acquire a bunch of different companies that have synergies. So part of their growth has just been from them acquiring companies. Let me see, cash from investing activities. Yeah, every quarter they're spending a couple $100 million on new assets, which is cool. But yeah, revenue's growing nicely. It's up 15 after going 21, after going 26, and they're making good net income. If we look at the net income this quarter, it says 85 million. This is like highly adjusted to the low side. They actually made like 350 million, much higher. You really look at the operating profit, the profits grew 43%. So hey, that one, dude, whenever you don't look at the PE for this company, you would not look at the ratio, or you maybe look at the forward PE 1 or 2 years out. You almost want to do a multiple, basically subtract the tax after this. Just take 10% off. Basically just they're making 1.2 billion in net income a year, and they're trading at 85. So they are still a bit expensive, like 38 times PE, forward PE. Yeah, on my math, they're trading at 38 times forward PE. A quick little analysis. Thoughts on Hive expansion into data centers. So yeah, that's kind of what Iron is doing. Like they used to be a pure Bitcoin mining company, but now they're trying to use these basically servers, like, or these GPUs to host servers. So Hive, that's good that they're getting out of Bitcoin mining. Let me pull this up right here, because all the Bitcoin mining companies never outperform actual Bitcoin. You know, if you look at Marathon, you look at CleanSpark, you look at HUD-8, you look at CoreZ, none of them ever outperform actual Bitcoin. So yeah, oh wow, look at the growth expected. This is crazy. The revenue is 45 million this quarter. It's expected to be 102 million in 2 quarters. So yeah, it looks like they're getting into data centers. That and Bitcoin mining, pretty cool. DubJ said, "Hey, AIRJ stock. What is this one? Air Jewel Technologies." So a $200 million market cap. So this is a very small market cap, and they're kind of at an all-time low right now. Let's go look at their financials and see if we can figure out what happened here. So they're a revenue-less company. If we go to the revenue right here, it says 0 because they've never sold anything. They've never sold a product or a service. So do beware that this is pretty much a startup. Did we get any net income numbers? Yeah, when we click on revenue, it says no data because they just never sold anything before. And they made net income last quarter. How did they make net income last quarter if they don't have sales? Oh, so yeah, that's interest. Actually, that makes a ton more sense. You know what? I forgot about that. So the actual core business, the operating profit loses 3 to 4 million a quarter. But let me check out. That must be positive interest they're making. Yeah, they're actually making a little bit of interest a quarter. Anyway, they're a startup. They have no revenue. I'd be careful. So, hey, Pumpkin, what up, dude? He said KMDA. Professor Pumpkin, what up, dude? Hope you're having a great Sunday. Hope everyone's having a great Sunday. Oh, backed by GE Aerospace. I should have actually, let me go back real quick. AIRJ, shareholders. Okay, I don't see him on the shareholders, but anyway, that's cool. So here's KMDA stock. This is Kamada. I don't think I've heard of this name before. So actually this stock is lower than it was in 2008. So you bought the stock then, you're down on your position slightly, but let's see what they do. Proprietary products. That's good news. That means no one can really sell what they sell. What are their proprietary products? Oh, so they're a prescription company. Okay. So they sell a bunch of prescriptions. Distribution, that's up. So let's see. Did they beat on expectations? So they missed on revenue this quarter. Analysts expected 46. They reported 45, but they did beat nicely on net income and on EBITDA. So that's, what are their gross, net margin? A 16% net margin this quarter. That's really good. Let me check out their net income down here. Was that real though? Yeah, they really did make this net income. It was slightly lower than 7 million, but they're pretty much like really are making 4 to 5 mil in net income a quarter. We do kind of just want to see the growth come back. Remember, they missed on revenue this quarter. Revenue only grew 5%. Analysts were expecting more than 5%, but at least they're making good profits every quarter. And the multiple, what's the multiple? They trade at 21 times net income. That's pretty fair. So DSX stock. What is DSX? Let's see here. Let's see. Yo, by the way, sorry, my Wi-Fi is a little slow tonight. By the way, if you wanted the follow button, we stream every Sunday this exact same time. We stream every single day. And watch out for people impersonating me. I don't sell anything. But here's this company, Diana Shipping. It's a $195 million market cap company. And they're at an all-time low, unfortunately. So they're worth $190 million, but you get a crazy yield. Look at that, a 6.2% dividend yield. Where are they headquartered? Oh, wait, this might be one of the tax-free companies that pay no taxes. Let me actually see if that's true. Tax rate. I'm not seeing tax rate on here. Yeah, they might really not pay taxes. Okay, so let's see here. Revenue is so this is kind of normal just with the normalizing supply chain, but the revenue's down 2% after falling 16%. And they did make net income the past 4 quarters, which is great news. They're making a couple mil every quarter. So let's see how much the dividend costs, though. Let's see how much they at least need to make every quarter for the dividend. So it doesn't tell us. Wait, what? Should be right here. Yeah, it's not telling. So they don't have a cash flow statement then. They don't report that part of the cash. That's weird. I'd just be careful with this one. Again, they're headquartered, I believe, in the Marshall Islands, where you don't pay taxes, just like all the other shipping companies. I you buy those to maximize your income. Those benefit from the supply chain issues. So, let's see here. Nathan, your Sunday research. Yo, what's up, man? What do you mean there? Yeah, if you got any stocks you want me to look at, let me know. We're researching stocks here. Yes, sir. Um, like Jeremy said, CSCO. Yeah, that's actually Cisco. This company has finally brought the growth back after acquiring Splunk. That was such a great acquisition. I used to own Splunk stock. It was a cybersecurity company, and then this company bought it. So if you go over here to their security revenue, this is where it got added to. As you can see, the reason the revenue really bumped up 60% year over year was from the acquisition. But I just like that this company is back to doing M&A, because look at this. If we look at their net income, you get a crazy yield here. You get a 2.4% dividend yield with Cisco, and they just acquired Splunk, which was a phenomenal acquisition. If we go to their net income right here, they're pretty much making 2.5 billion net income a quarter, safe dividend. And yeah, anyway, Cisco's interesting. You get the nice yield too. I like it. CHCI. Let's look at this one. Then we'll look at ARQQ. Do you want me to look at GLW, which is Corning? Remind me to look at that one. They're seeing a huge growth in their like networking or network business, or their optics. Or here's Comstock Holdings. Haven't heard of this company before. Oh, so they're a 150 mil company, extremely small market cap, but it looks like they're an asset manager and a parking management. Hey, they send people tickets for over parking. So their parking management business is actually booming. Again, it's easy to grow small numbers, but how consistent is this? Revenue's up 55 after going 90, after going 45. So that's impressive. And then they're in property management as well. So they're an asset manager, a parking lot manager, and an asset manager. So all three businesses are growing. Again, they're very small. Their total revenue combined is 12 million a quarter, but at least it grew 20% year over year, and at least they're making net income every quarter. Yeah, very good balance sheet as well. That takes a lot of risk off the table. No net debt, making net income every quarter. So they're an interesting asset manager, just a very small asset manager. They're in parking, property management. So there you go. Hopefully that was helpful. So I think this is the Kathy Wood ETF, ARQQ. So, no. I haven't heard of this one actually. This is Arquit Quantum, another quantum play. All right, let's check this out right here. 700 mil market cap, but a lot of the quantum names have been on fire. You look at qubits, IONQ, RGTI, they're pretty much all at all-time highs right now. And this one's probably just following. Provision of cybersecurity services. So maybe they're in cybersecurity. That balance sheet looks terrible. That must be from net income losses. Look at this. They lost 24 in 2024. They lost 55 million. Whenever you lose net income like that, that money has to come from somewhere. So look at how their assets just slowly decline every quarter. It's rough. Do they have sales though? No, they don't really. Revenue's down 43%, only 67,000. So nothing's blowing me away here. There is crazy momentum right now. Just the whole quantum industry has momentum, but fundamentally, I'm not seeing much good news there. Do you think quantum is going to dip? I think so, Brandon. A lot of the quantum names like IONQ, QBTS are at the most insane valuations. Like, I can't believe it. Or QUBT is the worst one. Look at this one right here. So here's their literal name is quantum computing. So look at this in the top right. They're a $4.6 billion company. I've seen many $4.6 billion market cap companies out there before. I feel like I've been around. I've seen a lot of $5 billion companies. I've never seen a $5 billion company with this type of like fundamentals, like no clear sight of any revenue growth in 2 or 3 years. The revenue fell 66%. The revenue was 60,000. They lose, 8 to 10 mil a quarter. That one is not, IONQ is also ridiculously overvalued. QBTS, ridiculously overvalued. I think we're in a bit of a quantum bubble here. But now's the time to own and be in the momentum stocks with the QQQ at all-time highs. Let me actually, oh man, I'm getting a little tired here. Let me check out the overnight market. Yeah, Qs are up 0.26. NVIDIA's up 0.25. Robinhood's up 3%. Wait, we might have just hit our first ever 1,000% return. Let's see if it's true. Oh my God, I'm going to take a screenshot of that. Never in my life, man, do I regret every share I've ever sold a Robinhood. 1,000% gain. They literally at an all-time high right now. Like this just happened just now. That's insane. We bought Robinhood literally right after their IPO. And then I regret every share I've ever sold to this company. Anyway, that's nuts. 1,000% return. That's an 11x. Okay. And all that, but this all time, if you look in the top left, all time, we're only up 15% all time in here. So we've definitely underperformed. We do have some losers, some hidden losers as well, like charge points, some crypto as well. And then how's our Rob? We're up 0.13. Our Roth IRA is up 0.48%. What's up in here? Oh, InnoData, dude. InnoData continues to climb. Wix is up a little. Interesting. All right, let's get back to the analysis here. All right. Do you think Q4 is going to push the markets up or down? That's interesting. I think it'd be tough to see us go up much, much more. So I'm betting on just a flat market. We're not going to go up too much or not go down too much. So that probably wasn't too helpful of an answer, but I don't see much catalyst to send the market down. Like that's the thing. There's no catalyst ending the semiconductor Ponzi scheme right now. So let's see. Ooh, Henry, he said Nebius. That's actually a stock owned by NVIDIA. NVIDIA, there's a lot of circular stuff happening right now. NVIDIA takes a $100 billion stake into OpenAI just so OpenAI can go buy NVIDIA chips with it. NVIDIA backs CoreWeave. NVIDIA owns a bunch of CoreWeave. NVIDIA is, I think, the largest share of CoreWeave. NVIDIA guarantees to buy the rent the extra usage from the chips there. But anyway, let's forget about it. Let's talk about Nebius. Nebius is a stock owned by NVIDIA. M said what app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But here's Nebius. They're at an all-time high. I wouldn't own a stock just because NVIDIA owns it. You always want to go do your own little research, your own little analysis on it. When we analyze this stock, this looks great. The revenue's up 590% after growing 200%. So the revenue went from 14 mil to 100 mil, and it's not stopping here. This was a record quarter. It's never been over 100 million before. And in 2 quarters, the analysts are expecting 264 million of revenue. Like the expectations are so crazy. And that's mainly because I think they're also going to raise expectations because this company just signed a literal $19 billion deal with Microsoft. That's a great customer, the second largest market cap out there. Microsoft, CoreWeave secures $14 billion Meta computing deal. OpenAI launches Sora 2 video platform and e-commerce integration. Oh yeah, I heard good things about Sora. Google Gemini is good too. Salesforce stock. Yeah, what up, Cliff? Let's look at CRM right here. This one is really being hurt by the AI thesis. If you look at a lot of software names like Adobe, Salesforce, they're saying like in 10 years from now, will we need Photoshop? I'm a believer that that we will. They've overpriced the AI thesis hurting this company. Like people are making logos and ChatGPT and stuff, but I feel like humans are always going to need the final touch for art. And I think this will get slowly unpriced from an AI loser to a slight AI winner. But that being said, I don't trust it that much to put a lot of money. Like I don't even think I'd put 5% of my portfolio in this stock. I'd probably keep it as a fun money position like I do with some of these other ones. Like I just put a couple $100 in them. I like them. Fundamentals are good, but I don't trust them as much as I do with some of these other names. So I'll put a couple $100 as a little fun position. So maybe I'd buy a couple shares of Salesforce for fun. This is one that I do really like. Good fundamentals here. They own Slack. Amazon uses Slack. We do want to see the white collar job market start to improve as well, because Salesforce heavily relies on that. But yeah, they're in services, sales, platform and other, integration, analytics, marketing, commerce. So very diversified revenue streams, and they're also super net income positive. I mean, net income's up 32. They're making 1.5 to 2 billion in net income a quarter, but the revenue is growing high single digits. High single digit revenue growth. Salesforce also just acquired INFA stock. INFA. We go to this company right here. All the revenue, this 400 million of revenue a quarter, is now going to be added to Salesforce. Yeah, this company literally just got acquired by Salesforce, which is interesting. They got a good deal. I really think Salesforce got a good deal there. Got to do non-popular stocks too. Hey, yeah, if you guys got any non-popular stocks I'm going to look at, let me know. Are these for sale on Coinbase? Hey, we're looking at stocks right now. We're not looking at crypto. So you can't buy stocks on Coinbase. But Coinbase is a stock though. But yeah. Nolan said hymns. What up, Nolan? So this company is a prescription company. So they used to sell a weight loss prescription. Now that is what led to a lot of the growth. They used to actually sell Ozempic. If you've heard of Ozempic before, that weight loss prescription, they used to sell it on their website, but now they no longer sell that. And that's really why the stock is being hurt right now. It's because they're thinking the future growth is going to go down, but it's really, it's interesting because the revenue growth right now is still insane. Revenue's up 72 after going 52, after going 83. So the revenue is growing crazily, and not just revenue, but also net income. They're making a good amount of net income every quarter, 40, 50 mil. But we are watching to see the growth of what happens with their weight loss sales. Hims and hers, I know they're starting to release some like testosterone products, but we want to just see them continue the growth. If they miss the growth, then they might fall down a little. Hey, no need to apologize, Dust Boy. How's it going, man? Please SHOT stock. What is safety? We don't really cover these kind of names. If you look in the top right, they're only worth $61 million. So think about that. This whole entire company is worth $60 million. They have sales though. So they don't. This is actually bad news. The revenue fell 93% year over year. Like they basically are our revenue-less company. The revenue was $44,000 and they lost $4 million. They're losing $4 to $10 million a quarter. And the whole company is worth 60 mil. I mean, it's just hard to trust this company. They have no sales. The sales fell 93% to 40,000. They're losing 4 to 5 mil a quarter. I don't see the light at the end of the tunnel. Be careful with that one. How much do you have invested? Around 70K I have invested I have way too many portfolios. I have a Webull account, which is worth 17. I have this account right here, which is worth 24. And then my $3,000 Roth IRA and my dividend only Robinhood portfolio. So yeah, we have a lot of portfolios. But yeah. All right. Luigi said PayPal. You know what? Let's check out PayPal. Yeah, this company is like a buyback play right now. They look like a Roku, a DocuSign, a Peloton, where they all peaked in 2021. But ever since then, the stock has been down bad. PayPal is the same price that it was back in 2017. So you bought PayPal in 2017, you're actually down on your position. But here's the thing. If we look at their PE right here, their PE is a 14. They're trading at 14 times net income. That's really like a commodity multiple where they're not really expected to make or lose any money. That's because the growth isn't there anymore. Like single digit growth, like the revenue's up 5% year over year. The previous quarter, it was only up 1%. You add inflation to that, it's really rough. But the good news is they're making $1 billion in net income every quarter. And what is PayPal doing with the $1 billion in net income every quarter? They are buying back their own stock, up, look at this. The net income is up by 11 or net income is up by 12. Net income's up 12, but net income per share is up by 19. That's incredible. Here's how you check that. You just go to the cash flow statement, then you see a net comment restart. Yeah, they're literally spending $1 billion plus solely buying back their own stock every quarter. So that's kind of the good news, but I'd really rather see them do some M&A. I know PayPal owns Venmo and Honey and some other assets. Which brokerage is best for analysis? Yeah, hey, Bet, I think it's this one right here, the one I'm on right now. I have Robinhood and Webull as well. But yeah, my favorite app to actually do analysis on is this one that I'm on right now. It's in the link tree in my bio, the very first link there. So yeah. Is this a fake? No, this is not fake. This is not AI. Good stuff. Hey, what up, King of the North? How's it going, man? So, is MCD in trouble? I don't think so, dude. McDonald's is incredible. I'm trying to get to 100K. How long have you been investing? I've been investing for since 2021. Yeah, man, I've been investing since 21. So 4 or 5 years now, almost 4 years. Hey, by the way, I'm definitely not an expert. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you. I'll never DM you. Watch out for people impersonating me. And hey, what up, Calvin? Is Drone Shield? What is Drone Shield? If you give me the ticker symbol, maybe we'll check that one out. So, hey, what up, Fork? He said FTAI stock. Let's do it. So this is FTAI Aviation. This company just impresses me every time I look at it. This is so incredible. If you're looking for an aerospace and defense company, check out FTAI Aviation. 73% of the revenue is their aerospace products, and check out the growth here. This is what's so crazy. The revenue's up 99% after growing 160, after growing 250. The revenue hits a new record every year, every quarter. So the growth is insane, and they're crazy beat on expectations. The orange lines what the analysts expect. The analysts expected 540. They reported 670. Insane. And they're making net income every quarter. That's the crazy part. So revenue's up 52, net income's up 170, easily making 100 million plus in net income a quarter. They had a record profitable quarter. They're deleveraging. Everything in this stock is headed in the right direction. I'm going to re-add them to the top of the watch list. I'm watching this one. I hope they can come down to a reasonable valuation because I'd like to buy them. Hey, Norman said PEP stock. So let's check it out. Pepsi. This company actually just took a stake into Celsius. So they took a 6% stake into Celsius, and in exchange for that, they actually gave Celsius Rockstar Energy. So if you've heard of Rockstar Energy, kind of like a Monster Energy competitor, Pepsi used to own that, but just gave it to Celsius in exchange for a huge stake. I actually love that Pepsi took a stake into Celsius. And check out this. This is one reason why I think the stocks have been struggling. If you look at Pepsi, they're the same prices they were before the pandemic, basically in 2019. That's because the revenue isn't growing too much. The revenue's up 1% year over year. Revenue's up 1%. Last quarter, it was down 1%. So, and the profits fell by 9% as well. But still, they're making a lot of money, basically 2 to 3 billion a quarter, but we kind of want to see the growth come back. And they kind of just answered with this, they're going to bring some growth back via Celsius, which is pretty cool. I do like Celsius. They own Alani and now Rockstar. Yeah, what up, Reptar? Hey, what up, dude? He said, bro, are you AI? I might be AI, Reptar. Why do people think that? Maybe I just talk to, maybe I'm just following the script. What stocks do you have in your Roth IRA? Yeah, what up, Tommy? So in my Roth IRA, I'm trying to make it more growthy. But here are all the stocks that we own in here. Iron Mountain, Main Street Capital, InnoData, and then some stocks like I have Wix. Here's our total percent change in every stock in here. InnoData has been the real winner. We actually hit an all-time high. We actually should be at an all-time high right now in this portfolio. Just because we've had this Roth IRA for pretty much exactly a year. But cool, we're up 18% all time. Not too shabby. And we're up in the overnight market. Main Street Capital's not a nice rally. This is one of the few monthly paying dividend stocks out there. All right. McDonald's ain't going nowhere. Yo, I almost trust McDonald's more than like Google for the next 50 years from now. I really love McDonald's. I keep seeing negative stories about McDonald's. Uh, well, hey, yeah, I would love to talk about McDonald's more, but I'd lose a lot of viewers if I did. You know, McDonald's is really a real estate royalty company that does great in a recession. It actually has one of the best charts of any blue chip out there. You know, in 2008, McDonald's didn't fall. They didn't fall. This is actually my second largest holding, by the way. Full transparency. McDonald's is my second largest holding, or actually my third largest. But yeah, if you go spend $100 at any McDonald's, $4 of it goes back to the parent company as a royalty, and they own the land under 80% of the store. So even in a recession, there's the corporation, the parent company, is still collecting royalties and collecting rent checks every month from their franchises. Pretty cool business model. They're way different from a Wendy's. We just looked at McDonald's stock. We saw they're at an all-time high. Boy, I wouldn't want to be Wendy's right now. You know, Wendy's, their stock is at the same price that it was back in 2007. You know, we saw at McDonald's, they didn't dip in 2008. They're well above it. Here's Wendy's, lower than their 2007 price. It's tough. A lot of these restaurants right now. I think McDonald's bringing back the Monopoly stuff tomorrow. Y'all hear about the McDonald's Monopoly? It's back tomorrow. Anyway, and they have the extra value menus, the $5 breakfast meal, $5 meal deal, and $8 Big Mac meal. Let me get off McDonald's because I'll just rant on. So here's Fortinet. This is a cybersecurity play. Hey, what up, Fork? Yo, this is a great cybersecurity stock. And hey, thanks, Reptar. I appreciate that. But Fortinet is a subscription model cybersecurity stock, and I'm pretty sure like 80% of the S&P 500 uses their software. But check this out: 40% of all the revenue is their subscription revenue, and the subscription revenue, like this is what you want to see for a growth company. Oh, come on now, come on, Wi-Fi. Can we load here? McDonald's is a great stock to own. I agree. Yeah, McDonald's is a never sell stock. Again, with McDonald's, I don't expect McDonald's to outperform in the long run. You know, I don't expect McDonald's to outperform the tech heavy S&P 500, but it's a nice stock to have diversification in, like to like diversify away from the tech heavy S&P 500, you know, have that, I almost call it recession proof stock. So yeah, there's a reason it's my third largest holding. They have a huge, if they were a REIT, if anyone knows what a REIT is, they would be in the top 5 largest REITs in the US. They purposely choose not to be and pay the taxes so they can pay qualified dividends. Anywho, look at this right here. Let's get back to Fortinet. Sorry. Fortinet right here is that cybersecurity company. And I love subscription model companies. It's all reoccurring. It's super predictable. And this security subscription revenue just hits a new record every year, every quarter on Fortinet. It's incredible. And they're not just making revenue. They're not just growing their revenue, but they're growing their after-tax net income. They're making $400 to $500 million of after-tax net income every quarter. This is what I'd look into. They're still a little expensive, 34 PE, but they're definitely worth putting on the watch list. A stock I'd happily own forever. How much do you make off of dividends? Yo, I make less than $100 a month in dividends, but on average here, like McDonald's is a big dividend player, a big payer for me. If we go to our dividend history here, McDonald's pays me $26 every 3 months, and they raise their dividend every year. But $26 every 3 months. Basically, I get $10 a month tax free from McDonald's. But yeah, I did the math the other day. I make just I think I make like $85 a month on average in dividends for a 75K portfolio. Or actually, it might be a little more than that. I need to redo the math, but it's because the stocks that I own in my portfolio, if you notice, I don't have the high yielding stocks in like this portfolio specifically in the top left. It's called dividend only. This is my dividend only portfolio. I only own dividend stocks, but notice these are all dividend growth companies. Meta, Google, UiPath, or why did I say UiPath? Constellation Energy. I saw someone in the Trent said UiPath in the chat. Yo, speaking of UiPath, we are down bad on them. We are down 33% on UiPath in our growthy portfolio, but super good news. They're up 8% in the overnight market because I believe they just announced some partnership with OpenAI and Google Gemini. So they're just kind of momentuming higher. But I'm kind of actively looking to get out of UiPath. I'm down bad on that stock, but good to see them up. There is some good sentiment around UiPath. They really need to innovate fast because they don't have too much of a moat right now. Hi, bro. Big fan. Hey, what up, Down? Appreciate you, brother. Hope you're having a great Sunday. You don't have any funds? Yeah, I don't have any ETFs in my Roth IRA. I'd always recommend for everyone to own an ETF in S&P 500, but I'm an individual stock picker. I kind of enjoy picking up individual stocks. And here's the thing, uh, all of my individual stock picking portfolios have outperformed the S&P 500, which is good news. Like this portfolio, year to date, S&P is up 14.4. We're up 58% year to date in this portfolio. We could check this one as well. Year to date, we're up 25, and this is on a return money weighted. We're up 25% year to date. Hey, look at that. We've gotten $127 in dividends. By the way, I just love being fully transparent. I go to all the other streams on TikTok and YouTube. No one shares their portfolios. No one shows their lifetime performance. Like, look, open profit and loss all time. We're up 15% all time. Really not that great. But anyway, if you have any questions for me, let me know. By the way, if you want to hit the follow button, we stream every day, every Sunday, this exact same time. I sell nothing. I have no course, book, WhatsApp, no private anything. But the number one way to support me, if you do want to support me, is just subscribe to my YouTube channel. I'm trying to build up my YouTube channel. I do portfolio updates on there all the time. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. I'm streaming on there as well, so if you missed anything, want to replay it, it's all on there. Sometimes I talk too fast. I apologize. But hey, what up, Trippy said Meta stock. Dude, heck yeah, I do own Meta stock. I might be biased. And hey, what up, Mikey? Good to see you, friend. So Meta Platforms, there's so many earnings tailwinds for this company. If we look at the PE, the PE is just the net income multiple plus any buybacks or share dilution. They're trading at 25 PE. That seems pretty fair for a Mag 7. I really feel like this could stretch up to a 30 and send this to over $800 to a new all-time high before it really maxes out. So I do think there's upside. If we can see their active users, this is nuts. Meta literally has 3.48 billion daily active users. They own Facebook, Instagram, Threads, WhatsApp. I hope they're not double counting users or something. And I hope some of those users aren't AI, because literally China can't use Meta apps. So that means well over 50% of the world is on a Meta app once a day. A little hard to believe, but it's kind of reflected in their numbers. Their numbers are incredible. If we go to the revenue's up 21%. They did 50 billion of revenue. Out of that 50 billion or 47 billion of revenue, 18 billion of it was after-tax net income. This is literally a $2 trillion company with 40% net margins, expanding margins. They have a dividend now too. They just introduced ads to WhatsApp. Has anyone heard of the new Meta Ray-Bans? The Meta Ray-Bans with the on display. I just think it's so cool. And they're heavily investing in the future. They're trying to catch up on AI because they're kind of losing the AI race, but their advertising business is just a behemoth. Yeah, here's how here's how Zuck is so rich. He owns 13.6% of a $1.79 trillion company. Meta's a beast. I might be biased. I do own them, but yeah. Someone said, I have SoFi. Should I keep 1K in the high yield savings to diversify or I'm a little bit a fan of having a bit of cash right now. The market is a little bit overvalued right now, but I would try and eventually, convert it to stocks. If you're far away from retirement, already have some other excess cash somewhere, you already have an emergency fund, try and move cash into stocks over the long run. Best said, what brokerage is that? Yeah, hey, if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. So, do you own any Hood? Someone said, do I own any Robinhood stock? Hey, what up, Relatable? That actually is my best performing stock for the first time ever in my life. Oh no, it just went away. But we were up 1,000% on Robinhood. And that, for the first, it just hit an all-time high in the overnight market. But that's a stock I regret every share I've ever sold of. This is a stock that, that's this app right here publicly traded. I have the Robinhood app. I've probably given them a lot of transaction fees. I own their stock as well. But this stock is one that deserves to be at all-time highs. Hey, Will, what up, dude? Thanks for all the gifts there, for the rose there, Will. I appreciate that. But check out Robinhood right here. We can see their net cumulative funded accounts. This is the important metric. It's 26.5 million, up from 24.2. So they're taking market share. This is just a growth company. Revenue's up 45% after going 40, after growing 52. They're just on a streak right now. And they did 980 million of revenue. Out of this 980 million of revenue, $390 million of it was after-tax net income. These brokerages make insane margins. They have the Robinhood Gold subscription. Their prediction market hit over 4 billion contracts, which they make so much high margin fees. Like, they don't make too much money on payment for order flows whenever you buy and sell a stock. Robinhood really makes the crazy high margin transaction fees whenever you buy crypto or whenever you do this prediction market stuff right here, which I don't really touch. But on this app, this is why the stock is rallying so much. They're kind of coming for DKNG draft. Oh, I can't even really say that ticker symbol, that name, because I'll get in trouble. But Robinhood is an innovative beast that's definitely overvalued right now. You would not want to touch that stock. So, okay. What stocks are looking good to buy now? Well, there are actually a few stocks that that are stocks that aren't at all-time highs like the market, that have good fundamentals. Like, I wouldn't want to catch a falling knife, not financial advice, of course. I bought 9 shares of Sprouts Farmers Market, I guess at the wrong time. Look at that. We are down on that one. So I'd maybe put a small position in that one. Progressive Corp, I'm not just recommending Progressive Corp because it's off all-time highs. Market's at all-time highs. This one's a good chunk off all-time highs. I'm recommending this stock because it has good growing fundamentals. I mean, you can't make this up. It grows 20% every year. Like, the revenue literally just hits a new record every year, every quarter. And not just the revenue that's growing, but the profits. The after-tax net income on Progressive was a record. It's never been $3.2 billion before. They also do these yearly special dividends. They normally just pay you 10 cents a quarter, but look, 10 cent, 10 cent, 10 cent, $4.50 special dividend. So they frequently, or every single January, or basically right after Christmas, they reward you with a special dividend. That's an insurance company. If you don't have any exposure to insurance, Progressive Corp looks interesting. Yeah. Is Cash App good for investing? No, they have too high fees, I think. Let's see, VGT. Yeah, I wouldn't want to own stocks on Cash App. That's not a great brokerage, but it gets the job done though. I mean, if you just want to own a stock and never sell it, it still does what it's supposed to. But here's VGT right here, Vanguard Information Technology ETF. This is an ETF, which means it's a basket of stocks. And let's go look at what it owns. Its largest holding is NVIDIA. So if you put $100 in this ETF, $17 of it goes to NVIDIA, $13 to Microsoft, 13 to Apple. But then this is where it differs from the S&P 500. Then it's Broadcom, Oracle, Palantir, AMD, Salesforce. So that's an interesting ETF, maybe a alternative to the S&P 500. You talked about CRMD a while ago. How are you feeling about it? Yo, I love CRMD. I'm still bullish on the stock, and I pretty much still have the same thoughts that I have about it as I did a few months ago. And one of the main thoughts I really want to stress out about this stock right here, because when I show you these numbers, they're going to impress you. And again, as much as I love this stock, and I really believe, not financial advice, that this stock is a 3X, as much as I believe that, they're only a $200 position for me. I cannot put a meaningful size amount of money in this one. It's kind of like Robinhood. It's kind of like SoFi. I love their fundamentals, but I can't trust it with a lot of money. But here's the thing that I think will impress you. This is what's nuts. Okay. So if you look at the top right, this is an $885 million company. So the whole entire company is worth $885 million. They literally have $190 million of cash and no debt. So 30% of what you're paying is just their cash on hand. So, and they're old. Let me show you the interest as well. So they have $190 million in cash, and it's not just sitting there. It's also making interest. They made $822 million of positive interest because they have no debt and lots of cash. But they're not just a cash-rich company. They're a super growthy one. They just got FDA approved for their products, so they finally have sales. They did $39 million in revenue. Out of this $39 million in revenue, legit $19 million of it was after-tax net income. This is the thing I can't believe. This is an $800 million company with $190 million of cash, making $20 million in net income every quarter with insanely growthy expectations. They already had a record revenue this quarter, 39 mil. Analysts are expecting 102 mil in 2 quarters. And 73 cents of EPS. Net income is supposed to double. Again, EPS is just net income per share. So 19 million of net income is the same as 28 cents. Net income is supposed to be 73. There's a lot I have to say about this. I have a lot of YouTube videos about them. And as much as I love them, I wouldn't have it as a huge position, only $200 or something. What app is this? Yo, hey, yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. What up, Reiki? Yeah, if it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. It's a brokerage where you buy stocks on. What about nuclear stocks? Best one? Hey, great question there, AC. The best nuclear stock of all time, not financial advice. And I've looked at all of them. I've looked at Oklo, SMR, VST, GEV, CEG. This is the best one, in my opinion. Out of all the U.S. nuclear reactors, this stock owns 30% of them, a little more than 30%. So this is the largest pure play for nuclear. There's no close second. Like they own like 22 nuclear reactors. The closest second is Vistra Energy with 3 reactors. And you honestly want to stay away from the small modular reactors, the SMR ones like NuScale, Oklo. These are proof of concept nuclear stocks. They want to make these small nuclear reactors, these local ones, but there's only 3 working small modular reactors in the whole world, and none of them are in the U.S. They're CEG and VST are the only, in my opinion, like real nuclear stocks. All the other ones are very speculative, and you're paying for a lot of future uncertainty. So VST and CEG are the 2 best. Should I invest in VOO and out my Roth or in and out? Yeah, dude. S&P 500, perfect, never sell. Companies like that don't share profits with employees. I forget what stock we were talking about. What up, Joshua? Is VGT better than QQQM? I don't think so. I don't know. I really like QQQM. If this right here, by the way, is the NASDAQ 100. So if you've heard of the QQQ before, this is literally the exact same thing as the QQQ, but with a lower expense ratio. Exact same NASDAQ 100 strategy, exact same holdings and weightings. But with a lower expense ratio. Literally, both are run by Invesco too. They market QQQ because they make more money that way. And hey, Sky Jade, no way. Sky Jade, thanks for the roast there, said WWR stock. So this is Westwater Resources. So if you look in the top right there, it's a pretty small company. They're only worth 104 million. Yikes. If we zoom out, whoa, hold on. Let me go to the monthly here. So because of all the reverse splits, this stock used to be... 192,000 a share. That's a lot of reverse splits. But let's see. Do they have sales at least? Revenue? They don't. So this is a revenue-less company. They don't sell anything. They don't sell a product or a service, and they lose money every quarter. It's a good balance sheet. At least they have no debt at all. Let's see. They have $6 million of cash, no debt. They're not making any cash flow because they have no sales. Yeah, I'd just be really careful with this name. I'm just not seeing there's no revenue. They lose money every quarter. Whenever they start making money, though, they might go up. But again, $105 million market cap. I'd just be super careful with that one, Sky. All right, let's see here. Oh, hey, Sky came from the TikTok to the YouTube. Hey, thanks so much. Yo, by the way, best way to support me is head over from TikTok to my YouTube stream. I'm trying to build out my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. And if you have a stock you desperately want me to look at, if you commented on the YouTube stream, I will pretty much always see it over the TikTok one. But I do also look at the TikTok one. Like Ishwar, what up, dude? He said LMT, your thoughts. Yeah, this is an aerospace and defense company that kind of lost its growth. Like the reason the stock gapped down on earnings because investors weren't happy. There were some bad numbers, but the stock has done good ever since with like warfears and stuff. But Lockheed Martin, this is your aerospace and defense play. I like how diversified their revenue streams are. 41% aeronautics, rotary and mission systems, missiles and fire control, space. So I like how diversified that they are. But one thing you got to watch out for is just the slowing growth. Like the revenue's only up 0.1. So revenue's up 0.1. That doesn't really beat inflation. And the net income did fall 80% year over year as well. So we do just kind of want to see the growth come back for Lockheed Martin, but that one just does good. They have a great yield. I forgot to show that great yield. WWR is a mineral play similar to LAC. Yeah, so actually that's a good point. Like Lithium Americas, for example, we're seeing a lot of these rare earth mineral stocks get stakes in from the government. Like look at Lithium America. They're a $2 billion company. They have a similar balance sheet. Like when we looked at your stock, WWR, they had a similar balance sheet, no debt and lots of cash. Look at this one. They have $508 million of cash and no debt, which is 25% of the market cap. That's your lithium play. Hey, Kiwi. Oh, wait. AUR? Oh, wait. I think this might be that startup. Then we'll look at Figma. I want to look at Figma too. Oh, and what up, Joey? He said BABA. Do you sell any options? Yo, Backwoods and Farm. I actually do not do any options. I haven't done any options in over a year. But I'm just not good at them. But here's Aurora Aviation or Aurora, what was it? Innovation. Okay. The revenue was 1 million. So yeah, this is tough. So this is a startup. The revenue's 1 million this quarter. And look at that. They're losing basically 200 million in net income a quarter. So that for that reason, I think it's a little hard to trust. I just don't like paying for so much future uncertainty. Like the risk reward is just tough. But look at kind of who it's backed by. Uber is the largest shareholder. Uber owns 17% of all the shares. But again, no revenue, losing 200 million net income a quarter, diluting you by 200 million a quarter. It's a little rough. Um. Oh, hey, what up, Plasma? Yeah, Plasma loves the mineral stocks like that. So Joey said BABA. This is your B2C, your business to. Actually, no. Amazon is business to consumer. Alibaba is more business to business. They own AliExpress, and a lot of people will buy a bunch of stuff on AliExpress and then sell it on their own Shopify website or something. This is your Chinese e-commerce play. They make a lot of net income, and this is in USD. They're making pretty much 4 to 6 billion in net income a quarter. And hey, Denise, no way. Thanks so much, Denise, for the hand heart. No way. I hope you're having a great Sunday. Thank you very much for that gift. If you got another stock you want me to look at, let me know there, Denise. I really appreciate that. But yeah, they're making good net income every quarter. And Alibaba just started paying a dividend. You get a 0.5% yield. But one reason why Alibaba has rallied up so much, when they reported earnings, they missed on every metric. They missed on revenue, net income. But the reason they rallied is because they announced that they're going to start manufacturing chips because NVIDIA can no longer send their chips to China. And Alibaba said they're just going to start manufacturing their own chips. See if there's any news down here. Alibaba negotiates office tower purchase. Okay, what? All right. Let's see. ET, yeah, ET. I don't like to talk about the MLPs because I don't want anyone to accidentally buy this stock right here. So don't buy this one unless you're prepared for a K1 tax from this. Isn't a stock. If you buy this, you're actually buying units of this company right here. And that's because this is an MLP, and that stands for Master Limited Partnership. And when you buy this, they send you a K1 tax form at the end of the year. And those are notoriously hard to figure out. I accidentally bought one my first year investing, and it cost me like $200 with an accountant. So that's also because they're an MLP. That's the reason they have a super high yield, a 7.71% dividend yield. But this is a natural gas pipeline company. Here's a little life hack for you. If you like MLPs but don't want a K1 tax form, check out the AMLP ETF. It owns, ET, I think is one of the largest holdings. Yeah, ET is 12% of this portfolio. So you could buy ticker symbol AMLP. It's an ETF, and this one doesn't send you a K1 tax form, and it owns all the MLPs for you. And you still get the nice exposure to the yield, the 8.3% dividend. You're basically buying this to maximize your income. But hopefully that was helpful. What platform is this? Yeah, hey, Cameron, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, I'm not trying to get to all those. Hey, what up, Sky? Can you do Duke Power? What's the ticker symbol for Duke Power? What's your personal choice for selling a stock? When I don't believe in it anymore, or if it's like too big, like there's so many reasons, like it's hard for me to really get into it. Like some of my biggest regrets, I kid you not. So my biggest regrets are selling out of great companies at the wrong time. Like I regret every share I've ever sold a SoFi. I regret every share I've ever sold a Robinhood. Like so sometimes I regret selling stuff. But sometimes I'll fully sell out of something if I never believe it anymore. Like, hey, this is a great example. I'm actually like the seed is planted in my mind. I might consider selling out of DocuSign. One of the reasons, if you look at DocuSign, one of the reasons the stock just tanked is because OpenAI, I kid you not, OpenAI announces DocuGPT. Oh yeah, look at this right there. OpenAI launches DocuGPT, creating new competition. So this company really has no moat, no IP, nothing exclusive. They have a great network and a lot of already like sticky customers, but the moat is narrow. That's like one example there, like DocuSign. I'm starting to slowly lose my faith in their future. So when I lose the faith in the future, okay. And some stocks are too cheap to sell, like Zoom, UiPath. As much as I like some companies, you definitely want to take the loss on. ChargePoint, sell out, fully take the loss on those. But some of these are too cheap to sell, like Zoom. Like 50% of their market cap is their cash on hand. and they make a bunch of like Zoom. Like Zoom's another example. They have no moat. Microsoft Teams, Google, whatever it's called, Google Video. There's just no moat for like FaceTime competes with Zoom, but I guess it's more enterprise. But no moat on Zoom. Tough hold there. Joey said EA. Actually, there's not much to talk about because this company is getting taken private. So if you're wondering why does the stock like barely move like this, that's because they're getting taken private by another company. Let's see, is there news down here? Yeah, Electronic Arts agrees to $55 billion acquisition by the Saudis. By Saudi-led, okay, whatever. So anyway, this is the company that owns FIFA, Madden, The Sims, Plants vs. Zombies. You probably heard of a lot of their games before. Let me actually verify. Madden NFL, Star Wars brands, FIFA, Need for Speed, Apex Legends, Battlefield. So, and you get a nice, decent yield there. Cool gaming company. Bob, what up, dude? Good to see you, friend. Hope you're having a great Sunday. He said USAR. Yeah, this is the next kind of US rare earth mineral play. It's kind of like LAC. It's kind of like WWR. Let's see. Rare earth surges on White House talks. Oh yeah, so there is some news that maybe the government will take a stake into this company because the government took a stake into LAC, took a stake into MP Materials. So I think they have like a mine. I don't think they have any revenue. They still have the asset of it. Anyway, that's a rare earth mineral play. Like MP Materials, for example, the government took a huge stake into this stock, and now MP Materials is opening up this one mine. I kid you not, this one mine that's going to supply the U.S. for certain rare earth minerals for the next 50 years. I kid you not. So that one's seen some really bullish moves. This stream is top tier. Hey, thanks, Tyler. I appreciate you, friend. Jerome said I sold out of Wendy's at $14. Hey, you made the. See, sometimes it's good taking the loss. So like maybe you bought the stock at 19 and you sold it at 14. Thank goodness you sold it at 14 because it's 9 today. That's like, I sometimes it's worth taking the loss on. MRVL or AMAT had some decent runs the past month, but really nice growth. Yeah, dude, we've been talking about Marvel. Like this is one of the cheapest chip plays. I wouldn't, they gap down on earnings. I'm like, maybe check it out down here. I would be careful with it here after it's rallied up so much. One of the cool things about Marvel Technologies is next quarter, the analyst expectations. Check this out. For the past 3 quarters, they just do 20 cents. Well, the quarter after this is $1.36. The net income or EPS is expected to rally up like crazy. Look at how growthy they are. Revenue's up 56 or 57%. They're finally making, $200 million in net income a quarter. They used to lose net income every quarter. So future looks good for Marvel, but I don't know about buying it right here. Hey, Reds01, dude, thanks for the autumn gift right there. I do appreciate that. Oh, forgot to get to Figma. We got to get to Figma, FIG. So this is a stock that it's kind of like an development app. Like I know a friend, he made an app in the App Store using Figma's software. So let's go look at their financials right here. By the way, I need to get my phone charged because we are running low and it's making my phone lag. Actually, we'll probably only be live for like another 10 minutes. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. We just stream every day, by the way. We stream every day. I sell nothing. I have no course book, nothing like that. And I'll never follow you, DM you. Watch out for people impersonating me. But check this out. Here's why I like Figma. They have good fundamentals, like revenue's up 40. They just IPO'd, so there's not too much history that we get, but we can see that the revenue grew 40% and the previous quarter grew 46%. They didn't just make revenue, but they made net income the past 2 quarters. 30 mil, 45 mil. This was their IPO fee. Don't worry about that. So I actually really like Figma. Valuation's still a little high though. What app is this? Yeah, hey, JDot, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Duolingo. Hey, we haven't gotten to Duolingo today. Let's do it. So, let's see. Should I buy gold or silver? For sure, gold. Silver's rough. I think it'll still do good, but not as good as gold, I think. Did you know, fun fact, out of all the silver in the world, if you owned all the silver in the world and all the copper in the world, okay, you owned all the silver and copper, the whole entire markets of those, and you're still worth less than Google. Can you believe that? All the silver and all the copper in the world combined, and you're worth less than Google and Amazon, or like just Amazon and just Google. So anyway, here's Duolingo. Gold is worth 25 trillion. Gold is the most valuable asset in the world. Nvidia's second at 4.5 trill, actually there might be a Saudi company, oil company in between there, but gold's most valuable asset at 25 trill. Okay. Duolingo. This is that language learning app. If you've ever heard of them before, you have to pay for their subscription or you see a bunch of ads on their website. So check out how growthy their subscription revenue is. This is why I love them. Subscription revenue is up 46 after going 50, after going 45, after going 50. The growth is nuts. Like, it's one of the best I've ever seen. Like, seriously, this is insane subscription revenue growth. And if you don't pay for their subscription, you see ads. So if you go to their advertising revenue, it's up 55% to a new record. Now, one reason why the stock is struggling is because of the AI thesis. OpenAI just made a language learning app competitor to Duolingo that's free. So maybe, and I remember someone in the other stream a while back was like, I literally just canceled my Duolingo subscription for that app. But I think this one is worth looking at right now. I'd put them on the watch list, and even I'd maybe nibble on the position. I wouldn't make, like, if I wanted this at 5% of my portfolio, I would certainly not make it 5% of my portfolio today, but I'd maybe make it 1%. They're really growthy. The revenue's up 41 after going 40. And on that, the net income is up by 83. So they're expanding margins. They've never had a 17% net margin before. Highest margin quarter ever. And the free cash flow numbers are super nuts. The free cash flow growth is insane. Just deleverage the balance sheet. As you know, liabilities go down with the assets. So you really focus on the asset to liability ratio, and it deleveraged from 65 to 36. Everything in Duolingo financially is headed in the right direction. That's why they initially rallied up like crazy on earnings, but then they lost it all from the AI thesis. Google's making a competitor app, but a lot of people like Duolingo. Ben said, can you look at PDI and their dividends? Yeah, let's do it. So this is the PIMCO Dynamic Income Fund. So if we look at the dividend, yeah, look at that. You get a 13% dividend, but do note the dividend kind of trends down every year a little bit. So that's because this must be a covered call ETF. So if we look at the chart of this, like this one, if you bought this in 2019, it was, $32. Now it's 19. So this isn't really an asset that I see outperforming the market in the long run. You're really buying this to, maximize your dividend income. You're not really buying this to outperform the market because your total return, you've definitely underperformed the market. But again, you get that nice monthly income is what it looks like. So what's the expense ratio? Ooh, that can't be real. I've never in my life seen a 2% expense ratio. That has to be a scam. No. So you're already buying an asset that underperforms the 8% CAGR, and then you're losing another 2% to expense ratio fees. It's tough, man. That's tough. Okay, we'll look at a few more stocks here. Talek said NGD. What's this one? NGD. New Gold. And that ETF was funny. Why was that so funny? Okay, but this one is just a stock that looks like follows the commodity of gold. They must own a bunch of mines. So yeah, Rainy River and New Afton, these are the mines that they own. And literally this stock just follows the commodity of gold, which is ticker symbol IAU. This is literally the commodity of gold publicly traded in an ETF. It's arguably better than physical gold, especially when you buy physical gold in smaller quantities. You're paying insane premiums, insane spot prices when you buy and sell it. So the literal commodity of gold, you can instantly buy and sell it whenever you want. Check out, this is run by BlackRock, the iShares Gold Trust ETF. Literally follows exactly what gold does, but just in an ETF form. And you're definitely saving on expense ratio fees. You go buy a small little coin of gold, you're buying it in small quantity. Let's see. How come you don't do any courses? You know a lot. I bet you could help a lot of people. Yeah, hey, I just don't do any courses right now. I don't sell anything. I have no course, book, WhatsApp, but I try to just give out as much information as I can on the stream. So yeah, if you want to learn from me, best way to learn is just watch the streams and check out my YouTube videos. I try to do stock portfolio updates and analysis breakdowns of stuff. Hey, number one way to support me, if you want to support me though, number one way is just subscribe to my YouTube channel. My YouTube channel is called Nathan Roberts, also in the link tree in my bio, but I'm streaming on there as well. And if you miss anything, you can replay it. But yeah, subscribe to my YouTube channel. It's called Nathan Robert. I'm trying to build up my community on there because I have 150 viewers on TikTok, but only 40 on YouTube. I'm trying to build up that because TikTok keeps like randomly taking down my streams and removing my lives from the For You page recommendations and banning me for 3 days and all. So anyway, here, someone said UNH. Hey, what up? UNH stock, that's actually a company owned by Buffett. And actually, Buffett just bought the stock for the first time ever. If we go to Warren Buffett's portfolio, his newest position here, his newest stock he bought 3 new companies. One of them was UNH United Healthcare. And, that's what was seen as such good news. Warren Buffett doesn't buy a stock unless he really does his due diligence, unless he really does his research on it. And that's why the stock has really rallied up the past. That was solely why the stock rallied up on this day. It was when it was disclosed that he took a position. We're actually a customer. We use the OptumRx. The OptumRx business has been growing very nicely, but you're still watching the future growth here. The net income is expected to fall another 50%. Net income's going to go, or net income per share is going to go from $5.90 to $1.70. So do watch. If this is right, they're not even going to be able to afford the dividend for a couple quarters, which is unfortunate, but that's all priced in. The main risk here, the main reason why UNH fell was because, they kind of frauded the government. If they get accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years. And the chances were being priced in, but it looks like right now it's being slowly unpriced in. There was some sketchy stuff that they did, overbilling the U.S. government, prescribing people that back brace they didn't need so they could get a little extra commission. So there is some regulatory headwinds still, but it looks like mostly it's priced in, or maybe it's over with. I don't know. Buffett bought some. I wouldn't have that as a huge position is what I'm trying to say. Go charge your phone. Yeah, I'm basically just going to stream till my phone dies. What's your opinion on QDPL? Oh yeah, we looked at this one when you said it the first time. So yeah, this is honestly like an interesting alternative to the SCHD ETF. So if you look at SCHD, they have a 4% yield, but this one has a 4.9% yield, and it's done a little better. You know what? Actually, let's do it exactly. SCHD. These are both the non-dividend reinvested charts. So yeah, look at that. Especially the past couple months, ever since the April dip, this one has recovered at a lot faster. And this doesn't include the dividend like Webull does. So this is really the chart you want to look at. So this QDPL is a higher yield and it's done better. That's interesting. Congrats if you own that one. What's your take on Hood? Yeah, Hood is, hey, Eric, I saw that. Yeah, I wouldn't touch Hood right here. I do own Hood shares, my best performing stock of all time. Also, my biggest regret. I regret every share I've ever sold of Robinhood. But yeah, we're up 995% on them. Overvalued right now. I wouldn't pay its valuation. They're trading at 85 times next year's net income. So certainly not something I'd be touching at this price. I was buying this stock, at the $13 level. So I certainly won't be adding more, but this stock deserves to be at all-time highs. They're not at all-time highs because of momentum. They're at all-time highs because of good growing fundamentals. Revenue's up 45 after going 40, after going 50, and the net income's insane. They have like 40% net margins, making a couple $100 million a quarter. Pretty cool for a Robinhood. But yeah, wouldn't touch it today. I put them on the watch list though. Actually, if you're looking for a cheaper version of Robinhood, actually, this is pretty cool right here. Yeah, probably a good price for Hood is maybe $110. Significantly lower than where it is today. Uh-oh, did my phone just go, uh-oh. Oh, there we go. Okay, good. There. But a cheaper version of Robinhood is actually FUTU stock. I would totally recommend this stock right now. They're trading at a much lower multiple, a 19 forward PE, 19 times forward PE. So remember, Robinhood stock is ticker symbol Hood. That's this app right here, publicly traded. I use Robinhood. I've probably given them a lot of transaction fees and stuff, and I own their stock as well. But another stock that's just like them, you see this app that I'm on right now? So that's Robinhood stock. Webull is also publicly traded, ticker symbol Bull stock. And this app right here is also publicly traded, and it's ticker symbol FUTU. So this app, this brokerage I'm on literally right now, this is their stock publicly traded, and they have good fundamentals. They trade at 23 PE. Remember, Robinhood traded at 84 times next year's net income. Well, they're trading at 23 times net income, and this is real. And they're just as growthy. This is the crazy part. They actually are arguably better growth than Robinhood, which is insane to say. The revenue is up 69% after growing 26, but revenue's up 69 and net income is up 111. Notice the net margin. They have a 48% net margin. That's insane. They're beating the orange lines with the analysts expect. They're beating on net income. They're beating on revenue every quarter. So this one is interesting. FUTU stock. All right, one or two more stocks here. Hey, what up, C? He says USD Western Midstream. I don't know what that is. What's the ticker symbol for that? But I know that's an MLP. I think they're in the AMLP too. If we go to AMLP right here, yeah, Western Midstream. This would be what you're talking about. This is one of the probably better MLPs. But again, these MLPs don't outperform in the long run. Like this stock is the same price that it was back in 2011. So, but you buy it to maximize your income, 9% yield, and it's sustainable too. Pretty cool. Wait, sorry, what's the app you're using? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. It's a brokerage, but I love it. A lot of people just like to keep their idle cash in here, like me. I have $1,100 of cash. It earns you a 3.5% APY and earns you daily interest, which is kind of cool. Hood is number 6 on IBD 50. Wait, what is IBD 50? I feel like I should know that. IBD 50. What does IBD stand for? Tyler said super microcomputer. Super micro is one I wouldn't touch. I do own them. I'll show you my position in a second here. But here's the thing with super microcomputer. They just had a huge $10 billion deal with DataVolt, which is good news. Supermicro gets shout out from NVIDIA, like best person to install the Blackwell chips for you. But look at this right here. There's the good news. The revenue's up 7.5. That's great news. Revenue's up 7.5, but the net income, the profits are down by 35. That means they're losing their margins. Their net margin fell by 39% year over year. That's the one thing keeping me away from buying Supermicro, especially at this price. And here, I'll show you my position in them. I'm already up a huge chunk, so I certainly, here it is. I'm up 99% on Supermicro. We only have 10 shares. We bought them during the accounting fraud stuff. If you notice right here, this was a crazy day. I was there. They were supposed to report earnings this day. I kid you not. We were just waiting. We were waiting. They were supposed to report earnings this day, and then the earnings report just never came out. And then the market freaked. And then the accounting issue, but then 9 months later, they officially reported earnings again. Anyway, I'd be careful. I don't like them here. They just sell a commodity. The margins are going lower. Dell's competing with them. Be careful with Supermicro at this price. I wouldn't buy them here, to be honest. Oscar and Rich Tech Robotics. Okay, I see some people saying Rich Tech Robotics. Here's the thing. I kind of avoid this one because I don't have anything good to say. The stock really shouldn't be where it's at today. I'll just show you the numbers for yourself. You can draw your own conclusion. Check this out. If you look in the top right, this is a $1 billion company. I've seen a lot of $1 billion companies. The stock is mainly just following momentum. This is the time to own the momentum stocks because the market's at all-time highs and the momentum just keeps momentuming higher. But this isn't one I'd really trust fundamentally. Now, I like looking at the financials, and it's kind of startup, man. I mean, they're doing $1 million in revenue. The revenue's down 18% from the previous year, but the revenue's only $1 million a quarter, and they're losing a couple mil a quarter. They have no IP or patents. This isn't the robotics stock. If you're looking for a robotics play to just buy and never sell, I wouldn't trust that one, to be honest with you. I'd pick a Symbiotic or an Amazon. This one is your main robotics play. They have over 1,500 registered IP and patents. And they're helping out Walmart with their robotics. If you look at this stock right here, Walmart loves them so much. Walmart now owns 13.5% of all the shares. And this one has real sales. Rich Tech Robotics did $1 million a quarter. Well, this one does, 500 mil. These growth rates are insane. Revenue's up 25 after going 50. So hopefully that was helpful. Instead of just saying a bad thing about a stock, I'll try and recommend a better one, I think. But yeah, again, You can see the numbers for yourself. I mean, 1 million a quarter. It's kind of just hard to trust that one. But Rich Tech Robotics is a momentum play. I wouldn't short it or anything. It'll probably continue to go higher with how momentum-y this market's being. But I just don't think it's really justified. Like if you look at SoFi, you look at Robinhood, you look at AppLovin, you look at Palantir, you look at any of these other like they deserve to be at all-time highs because their fundamentals align. Like or even any of these stocks like Comfort Systems, Powell Industries, Amphenol Group, like out in the long run, fundamentals always outshine. That's why I always focus on numbers so much and what numbers they report because it really dictates the long-term move of what the stock's going to do. So, can you trade Futu on Robinhood? You probably can, yeah. Oh, I don't know, probably, yeah. Investors Business Daily equals IBD. Oh, okay. Thanks, C. All right. PATH, yeah, UiPath, yeah. Hey, a lot of people have been talking about this one lately, man. Dude, y'all want to see some else? Look at this. Look at these buy orders just for eternity. These go all the way back to 2021. I bought shares at 57, 40, 50. So, dude, this is one of my biggest losers out there. But yeah, I'm kind of looking to get out of the stock. But the stock right now is up 6.59% in the overnight market. They just had partnerships with OpenAI and NVIDIA. I've just deemed them too cheap to sell. Unlike other companies, it's worth selling out of some other companies. All right, last stock we'll look at here. S. Lopez said NBIS. You know what? That's Nebius. That's the company that's owned by NVIDIA. So if we go to the NVIDIA portfolio, and then right after this last stock, we'll do a quick portfolio update. I'll share with you how the overnight market's doing. But yeah, if we go to the NVIDIA portfolio, you know, NVIDIA has to make all their trades public. Kind of like all these super investors over here, like Nancy Pelosi has to make all her trades public by SEC law. And NVIDIA right here, one of the stocks they own is Nebius, NBIS. It's 4% of their portfolio. And just because NVIDIA owns it doesn't mean you should. You want to always do your own research on a stock. You know, never buy a stock just because you see some TikTok or YouTube talk about it. Always do your own research on it. And, you know, the numbers look great here. I mean, the revenue is up. It's 100 million up from 14 million, you know, a 6x increase. And the analysts are super bullish, especially after this Microsoft deal. You know, they did 100 mil revenue this quarter. They're expecting 264 million in 2 quarters. That's insane, the growth here. You go to the weekly brief. Yeah, Microsoft and Nebius signed a $19.4 billion AI computing partnership. So the reason the stock has really rallied up the past couple months here is because of that Microsoft partnership. You know, Microsoft, second largest company in the world. Great partner. And Mimo said ARKK. Yeah, ARKK is literally just the Cathie Wood portfolio right here. She's honestly lost a lot of respect, Cathie Wood, because her ETFs just haven't been doing that great. But yeah, here's her holdings. You know, it's Tesla, Robinhood's done amazing, Coinbase, Roku, Roblox, Shopify's great, Palantir's great, Tempest AI, AMD. Let's see and you can like batch trade follow Cathie Wood into this as well if you wanted to. Oh my goodness, dude. TikTok saying I'm AFK. Well, all right. Just filled out the CAPTCHA. Let's see. So Cathie Wood's ETF, what did she increase? New position. So yeah, she bought BitMine Immersion. She bought Bullish Circle. Hey, someone said Kamada earlier. Hey, it looks like Cathie Wood is buying that stock as well. What's her smallest holdings? Let's go all the way to the bottom. Dang, how many stocks does she own? These are all like 0.01% of his portfolio. She owns JFrog? Man, I lost money on that one. Oh, well. All right. Well, let's give you a quick portfolio update. Then I'm going to get out of y'all's hair. I appreciate everyone being here. By the way, if you want to hit the follow button, we stream every Sunday this exact same time. I sell nothing. I have no course or book or anything, no private group or nothing. But anyway, best way to support me, though, is just subscribe to my YouTube channel. It's in the link tree in my bio. Or you can just type it into YouTube, Nathan Robert. User57 said, what app is this? Oh, yeah. Oh, full disclosure as well. If you want to get this app using my affiliate link, if you go to the link tree in my bio, the very first link there, that's an affiliate link to, I have an affiliate link for all the links up there are affiliate links, full disclosure. So if you wanted to get Robinhood, Webull, or Moomoo, all the apps are in the link tree in my bio with affiliate links. So if you go and deposit $100, we'll both get like some fractional shares or something. So it does help me out. But yeah, full disclosure, here's a quick portfolio update. Then I'm going to get out of here. This is our never sell portfolio. Once I buy a stock in here, I literally try and never sell it. So this has done really good. You can go to my YouTube channel and see when I first created this portfolio and see what it looks like. But yeah, all time in here, we are up on a return money weighted 134% versus the S&P 500 only up 60. This is why you don't even have to start with a lot of money. For the longest time, this portfolio was $160. All these blue circles are every time I deposited money. As you deposit more money and as your portfolio CAGRs at 8% plus a year, you should just make a lot of money. So yeah, that's what's pretty cool. Yeah, that's our Moomoo portfolio. Then we have our Robinhood account. This is our dividend-only portfolio where every stock in here pays a dividend. Yo, oh my goodness. Dude, shout out to C on the YouTube stream. Oh man, I feel so bad. I'm basically about to end the stream here, C Dot. If you have a last stock you want to look at, let me know there, C. But dude, with this $20 super chat, I hope you have a great rest of your Sunday, C. Thank you very much. He said, great show. Thank you so much. See, you're a real one. I appreciate that. But yeah, here's our dividend-only portfolio. We're up 15% year to date, which is pretty cool. And here's our total percent change on every stock. Again, every stock in here pays a dividend, and also every stock in here is also in the S&P 500. And most of these are dividend growth companies. Like I get it, Meta, Google, Constellation Energy, they have very low dividend yields, but the stock price appreciation really makes up for it, and they still pay a dividend. Here's the overnight market. Expect the green day tomorrow. Look at that. QQQ's up 0.3, Nvidia's up 0.3, Apple's up 0.3, Tesla's up 1, Robinhood 2, SoFi 1, Palantir 2.5. So market's pretty green in the pre-market or overnight market. And also we have our Roth IRA, which just hit an all-time high as well, which is pretty cool. Our Roth IRA is just a tax-free retirement account, and these are all the stocks that we own in here. I'm trying to bring more growth to this portfolio. We have a REIT and a BDC in here, two of the higher yielding names, Iron Mountain, that's your data center real estate play, and Main Street Capital, that's your monthly paying dividend loan play. So yeah. Data has been on a freaking monster rally. And then finally, we have everyone's favorite, my Webull portfolio, my risk on growthy account. If we look in the top left, the open profit and loss, no one else shows their lifetime performance. I always try and be fully transparent. I guess I got really nothing to hide because the market's been doing so good. But even when the market's doing terrible, like I've been streaming daily for over a year, I always show my lifetime performance and everything. If you look, we're up 14% all time in here. These are all the stocks that we own in here. We have some losers that you can't even see on here. Like we sold out we sold out a Charge Point. We sold out a Chainlink for like $1,000 loss. Like that's why we're only up 15%. But yeah, these are all the stocks that we own in here. A lot of the risk on names. I sometimes do some swing trading in here. So let me sort it by this way. Yeah, we're almost up 1,000% on Robinhood. That's our best performance stock of all time. We got Dave, SoFi, AMD, Reddit, Disney, Supermicro. So anyway, hope you guys have a great rest of your day. Again, if you want to hit the follow button, we stream every day. Sometimes this is our second stream of the day. We've run we've been streaming for 2 hours and 30 minutes. We've basically been streaming for over 6 hours today. So anyway, have a great rest of your day. We stream every Sunday, this exact same time. We stream every day while the market's open, sometimes twice a day. So see you guys later. I saw nothing. Hey, if you hit the follow button, watch out for people impersonating me. Not in a mean way. I won't follow you back, but you might get followed by someone impersonating me. I'll never follow you. I'll never DM you. I don't sell anything. I have no course book, no private anything. So yeah, I just like saying that because I get DMs all the time. I kid you not, DMs all the time. Hey, was that you messaging me? Like, and some guy literally fell for lost $200 of Bitcoin to it. And I felt so bad. So I always try and disclose, please watch out for people impersonating me. I'll never, anyway, you guys are smart. Hey, dude, I just ended the YouTube stream. Thanks again, C, man. C with the $20 super chat, dude. Thank you very much, my friend. Yeah, dude, that WES MLP looked very interesting. Especially the AMLP ETF. Remember, AMLP gets you exposure to all those MLPs, but without the K1 tax form. So that could be an interesting one, and it diversifies you into all the different MLPs. Yeah, I hope you have a better